Hey. Don't be scared, cause then you'll regret it. Hey. Hey. GizzyCredit. Anything you want, then you can get it. Hey. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic. Look pathetic. GizzyCredit. Hey. Anything you want, then you can get it. That's my intro music. Shout out to you. You guys hear me well? Let's go. Let's go. You getting ready for this? GizzyCredit. Anything you want, then you can get it. Don't be scared, but then you'll regret it. Have the cafecito ready? Don't be scared. What you need is just a change of plans. Hey. And time is money, you know, got that cash. You already know. Just get it fast. Gizzy. Hey. Hey. Mi gente en el Facebook. What's good with y'all? That's it. What's good with y'all? David Bradley, what's good? How you doing on Facebook? My people on YouTube, what's good with you? Make sure you like and subscribe. Hit the notification bell. That's the best way you guys to support us and helping us put out more content, most definitely. Thank you so much for all the followers, all the people who've been following for years and are now in the podcast. And you guys enjoy the podcast. You guys enjoy the education you get from it. And it doesn't stop. Anyways, let me get my partner John on the line because right now we're going to talk something serious of settling your debts. Is it a good time to do those things? A lot of times we get those questions and no better time to ask them. But now, especially with people getting their stimulus checks and especially with the Rona being out. Let me get John on the phone. Kenya, how you doing? David Bradley, what's good? Activados, yes, thank you, Kenya. We go up on John on the phone. Hey.
Hello.
Hey, Jay, what's going on?
Hey, what's up?
Good. How's it going?
Good, man. Good. It's Monday, so.
Mondays are always busy.
Monday, just getting back in the swing of things.
Hey, Gizzy, are you guys seeing disputes taking longer than normal? Lemus Donnell. Lemus, no. Actually, we're getting results when we dispute online. Could be 5 days, could be 2 weeks, 3.5 weeks. I mean, only when we dispute.
Yeah, I would say more generally, it's pretty much standard. I mean, I haven't seen any change throughout this whole process. I mean, early on when the virus started, you know, it was they were pushing them right till the 30 days for obvious reasons, but you know, you were still staying within that confine. So more now, though, I mean, now it's, you know, business as usual. You're not seeing any. I mean, we're not seeing any type of, you know, slowdown or anything like that as far as like getting the disputes back in a timely manner.
Yeah, no, it's. I mean, I'm putting out a lot of credit repair results videos, and I normally say these results came back in 2 weeks, these results came back in 3.5 weeks, or the full 30 days. But I don't know, are you disputing by mail? Maybe these people don't have, you know, the address correct. Maybe that could be it too, John.
Yeah, but you know what? I think a lot of times people forget they got to factor in for the mail, right? People get fixated on this 30 days and they don't realize that, you know, you got to realize it doesn't matter where you're mailing it from. It takes 3 to 4 days, business days to get there, and then there's another day or two for it to upload into their system. So you're, you know, each way, and then it's another 3 days once it leaves them to get to you by regular mail. So, I mean, you got to factor that in if somebody's mailing the disputes outside of that. You know, it's going to take some, you know, you're going to have regular turnaround times once they receive it. I mean, they know what they got to get it out by. And it's not as if they're not going to hit those dates. It's more probably catered around, maybe I'm assuming, confusion relating to what the individual that's working on their behalf or sending it themselves, maybe they're not factoring in the mail time. I don't know.
Correct. I got Tommy Burdolis Jr. on Facebook says, I got disputes back in 3 to 4 days. So, I don't know.
Yeah, I mean, look, it also depends on the amount of accounts, right? I mean, if you have one account and you do it online, you can definitely, I mean, in some cases, you can get it back relatively quickly, right? If you have a significant amount of accounts, when you do it online, they push it typically to the back end of the 30 days. But if you're mailing it, again, I mean, I think the one thing, just from experience, that people just forget that you have to factor in the mail time. If that's exactly what happened, I don't know.
Yeah, I mean, I've put out videos of getting results in 4 days. I mean, in 4 hours, 5 hours. You remember those?
We've gotten. I mean, it's not the norm, but it happens.
Correct.
It's definitely a percentage. I mean,
and that's the big question. I mean, we should do a whole podcast just on how long can it take, because we get that question asked every day.
Yeah, I mean, but the problem is that, getting fixed on a certain period is why we like to generalize it a little bit and give them a window based on the amount of time that we have been doing this and the overall mean of, clients that we've worked on, because trying to give an exact number in a business that deals in very heavy shades of gray and isn't binary by any stretch of the imagination is difficult. So again, the best thing you can really do is give a range. If somebody gives you an exact period of time, like says you'll be done in 30 days, I mean, that's ridiculous. It's ridiculous unless there's something relating to them knowing exponentially that they either have a pay for delete or something, and it's just a matter of the bureau receiving it and making the necessary adjustment. But even then, it's not a guaranteed experience to put up a fight. So I just think anytime somebody comes in and tells somebody a fixed time, like it'll be done in 2 weeks, I'll have it done in a week, we'll get it done in 3, et cetera. I mean, that should be a run in the other direction type situation. I think the goal should always be get it done as soon as possible and get the client to the goal. I mean, I think people are so fixated sometimes on how quickly they can get there, they lose sight of the fact of being able to get there. They fall in love with the idea that somebody sells them on it can get done in 15 minutes.
Yes.
That when that person doesn't hit that mark, right, that they're so stunned, right? They're so shocked that the person they worked with before told them they get it done in one dispute, and they didn't get it done in one dispute. Which, I mean, setting a bar that high, you're setting the expectation way too high. It's destined to fail, right? So anybody expecting that, unfortunately, is trying to find and align themselves with somebody maybe that is a short, finding a shortcut, or they think they found a shortcut, which there are no shortcuts anymore. You got to do it the right way in order for it to stick. I mean, it's the only way it works nowadays. So I'm just saying that, I think at the end of the day, it ultimately helps to set the proper expectations of the client.
To what they want, to what they're looking, to what they're looking to do. If they're looking to buy a car, if they're looking to buy a house, if they're looking to get credit cards. Now my thing is, it's all about positioning you to get to that point. So
but if not to interrupt you, but that's because that's the level we're thinking on, right? That's because that's what we get clients to. We're not just thinking the initial goal. The initial goal is get the file clean, right? But we're already beyond that. We're thinking, okay, we know we're going to get the client clean. What's the next step, right? What do you want to do next? You want to get a car? You want to get a house? You want to do both? You need this. You need this. You need this. We're already in the positioning point. Getting the file clean is something as if it's already assumed that it's going to happen. Now, we can't tell exactly when it's going to happen, but if the client's patient and they let us do it, we'll get them there, right?
Yes.
So then we start positioning, like I was just telling you today on the phone. I mean, we had 2 more clients over the weekend are buying houses.
Yeah.
I mean, this comes in almost every day. I had a guy on Friday. He's buying a house. These are all clients of ours we've got over the last 2 months. They've gotten in a position to be able to do it. And it's not a coincidence. I mean, it's because we know how to position them. And we know how to get them in a position to be able to go and buy the house and to be able to go and exercise that muscle. I mean, it's what I believe, enables us to set us apart from almost all other companies, the ability to understand the financing side of it and when a client's ready and where they can go and what product they're accessible for, especially with the auto loans, and things like that, because there's emergency situations. There was a client of ours 2 weeks ago, her husband's car broke down. We had just started literally like a month before, and they're like, we need to get a car, but we don't want to go into the dealership and screw anything up. Can you give us a lender? We went through the report. We found the lender. They got approved. They're happy. I'm not happy with the rate because it's nowhere near where we're going to be when we're done. But they didn't overpay for it, which was great. They followed my advice. They used one of the lenders I gave them. It was one toll. They got it. It was it, as far as I know. So It ended up working. We were able to find a Band-Aid in the interim, and then, when we're all done, when everything's all said and done, we can either refi it if they love it, or we can get them out of it and they can get into another one at the right rate.
A lot of times, Jay, is people come to us beat up. That's like people come to us beat up. It's like, all right, cool. They went to battle, and then they come to us all beat up with collections, late payments, charge-offs, what is it, the medical bills and all that. Just like, we got to do something. Like if you're trying to just live for the next 45 days and be like, all right, cool, we need to get you a car. Let's wait 30 days and see where we could get you at. At least you won't get a really higher interest rate. But if we could get you there in 30 days, go ahead, go do your thing. Yeah, and that'll put a Band-Aid. That's what I mean. They'll put a Band-Aid in the situation until you get better.
Yeah, exactly. But I also think along those lines, I think that, clients come to us beat up on the credit, but they a lot of them come beat up psychologically too, because they've been to 2 or 3 companies before, and they lose. It becomes a full circle scenario, right? Like, they come in and it's they've been to 2 or 3 companies before, more than likely that were less expensive, and that's the typical course of action. So by the time they get to us, they're a little worn down, not only from the credit perspective, but from the fact that the expectation that was set previously and wasn't followed through with, or that they got taken advantage of and stuff like that. So by the time they get there, they're kind of worn down, which is understandable, right? I mean, let's be honest. You hire somebody to do a job, you hope that individual is going to do the job or something close to what they set the expectation on. So when clients come and it's nowhere even close, you're not only putting the credit back together, but you're building the trust back up, right? It becomes a psychological thing as well. So you're building confidence, and the client starts to they start to get confidence on that level as well, which is good.
Yeah, but a lot of times we get these customers that are like, so you're gonna just do this for 6 months, and once if you can't take it off, that's it. Take care, see you later. We get some customers who talk to us like that. Like they've been through credit repair reforms with other people, and those people just say to them, hey, yeah, it's been 6 months. Yeah, I wasn't able to remove that. And, you're gonna have to go somewhere else. Or
there's clients there's companies, again, I don't want to speak about any of the companies, this isn't how we do things, but I know there's companies that's how they charge. We'll charge you for 6 months and then we're done.
Correct.
Now obviously in those kinds of situations, it starts, and this may not apply to anybody, but from a distance, you start to question, the legitimacy of it, only not the legitimacy of the functioning of it, but the legitimacy of the completion of the file, right? If you're going to be in with a company for 6 months, you're going to pay each month and think that it's economical, and they're going to stop on set at 6 months. Well, what happens if they're not done? You just paid 6 months worth of stuff, and you only have a 6 month window. So it really starts to dilute, the end game of the situation. I mean, if there is a predetermined end when you start as far as credit repair, and it's without any idea of working through the file, I think that's impossible. It's impossible because, look, we look at so many files on a daily basis, and I would say 10% of the people are completely honest about how the file was worked on before, right? So you can't even understand what was done until you actually get into the file initially. After you get into the file after the first round, then you have to start moving all of these different variables in order to work around what was done before. So for a company to get in and be like, yeah, 6 months, we're done. Thanks for giving us a swing. As a consumer, you have to assume that they're not, more than likely, they're not going to get you to the end zone, right? They may move the needle a little bit if they're good at what they do. And there's a lot of files that get done a lot sooner than 6 months. But if you're paying a monthly fee, right? If you're paying a monthly fee for that company, they're not going to rush to get you in and out. That's not the business model. Do the math, right? So, I think in our situation, which not everybody's crazy about how we charge, but we do it for a reason based on experience, and trying to extend terms, and clients getting frustrated if you charge monthly and things aren't done in 2 weeks, and it starts to look transparent. It's just a better way of pricing. And the people that believe in our service and believe in what we do, which we're very grateful for, but we have a good-sized ecosystem of people that absolutely believe in what we do and grow, and that's how the business grows along with these kinds of things. And at the same time, they're the ones that are like, listen, we're good. You tell us when we're done and we're good to go, and that's a beautiful thing that you can build trust like that from a distance. Because, like we always see on the intake calls, when people are coming in, we like to do these intake calls because you're not walking into an office to initiate the service, right?
Correct.
You're not walking into somebody's office. You're not shaking hands and you're not looking them in the eye. So to be able to build trust from a distance, and build, significant amounts of trust and clients from this, I think is an incredible thing. I'm very grateful for it, right? It obviously shows that we're capable of doing what we're able to do, which we show on a regular basis, but more importantly, we're making people feel comfortable that are walking in the door, right? And I think that's enormous because, I mean, it's a situation where, the business as a whole has a fairly, it's getting better, but the stigma surrounding it for a large majority is not tremendous,
Yes.
So if we can do our part to try and, obviously delineate.
That's why it's been so easier getting referrals, because, I got this customer, Harvey King.
Yeah.
He has a big family. Oh my God. His one of his cousins contacted me the other day, and he goes, I say, yo, every time Harvey, somebody tells me Harvey King, I'm like, Harvey King must just tell everybody that's his cousin so that they can get a discount, right? But no, Harvey King has mother on grandma on both sides, 8 kids or 12 kids from the other one, and then those are the grandmothers, and then those grandmothers had 4 kids each. He was telling me something about like the grandkids. There's like 86 of them. It's like, what?
Listen, I mean, I got to tell you, man, I mean, he refers so many people.
Yeah.
I mean, so many people. Obviously, we cleaned his file. He's a great client, actually.
Correct.
He let us do our thing. We got in and out quick. But, he's been such a loud voice in North Carolina for referrals. It's incredible. Yes. I mean, I know that he hasn't come back to us for funding or anything, but, I mean, I greatly appreciate all the obviously, the referrals. It's the individual that referred is a walking example, right?
Yes.
You don't have to watch a YouTube video. I know people that watch from a distance that haven't proceeded. They watch a YouTube video and they, there's always that level of skepticism because they got burned before that, right? So they look, and that person did a YouTube video that they got burned by, so they naturally assume that it carries forward, even though it doesn't. And no matter how many YouTube videos you come out with or how many of these podcasts we do, they're just going to be skeptical.
Oh,
right?
of course. Yeah.
It's just how some people are wired. And I get it to a certain extent. If you've been burned a couple times, you don't want to get burned again. But the problem is, in a lot of cases, is that people can't wait the 7 years for the stuff to come off. They can't. So you have to do diligence. Anybody that I talk to, and I've talked about a lot on these podcasts, is that, do your diligence. Take your time. Find the company. If you're only going to use YouTube, and you're not going to work off a referral base, then do take the time and do the diligence on the company. I mean, if you've seen a company around for 10, 12 years pumping out thousands and thousands and thousands of success videos and client testimonials, and,
yes.
I mean, literally all these things, and that's not giving you comfort, I'm not sure there's going to be a lot of situations that are going to provide you any additional layers of comfort, because I don't know anybody in this, I may be wrong, because I'm not, I don't watch a lot of YouTube, but I may be wrong. Correct. But I don't think there's a lot of other credit repair companies that are pumping out this kind of depth. You know what I mean? Like, I don't for this long a period of time to this extent. So I just don't know. So, but I do understand the skepticism if somebody's been burned. It's a natural psychological reaction. But I think, that's what we like to do, all these extra lengths in an effort to between the podcast to provide more transparency and education and all these things to just demonstrate. Obviously, we want to educate people too, because I think that's important.
Correct.
But it also lends to just the overall understanding of what we're doing, right? I mean, in all fairness, I mean, the results are great. We show years and years and years and years and years, thousands of results, right?
Correct.
Over the course of time. But if you can actually listen to the individual that's doing the work for you, articulating the knowledge relating to the subject matter, and it ties together with the actual results. I mean, that seems like pretty definitive, right? I mean, and if anybody wants to go back and fact check any of our podcasts, please, by all means. I don't think you're going to find any inconsistencies. So
that's true.
Which lends to today, which is what we wanted to talk about today was things we kind of briefed on in previous podcasts, but it's just
because you never know with the topic of today's discussion, which is when to know when is the right time to settle your debt, or is it I got it right here. Is it a good time to settle your debts during the Rona, which is what we're going through right now? And because this question gets asked all the time. Well, why don't I just pay it? Well, if you pay it, it's still going to be a collection that is paid off. It's still considered negative. You probably will get 1 point or no point increase at all. So let us remove it first, and then you could go ahead and pay the account once it's removed, so you can have peace of mind that it's an account that you settled, that you don't have to deal with it no more. I mean, more than anything, I tell people, if you want peace of mind, you need to just pay off the debt or settle the debt, you know. But when to do it is the topic of discussion today. And
Right. So,
when
but hold on. Let me just clarify that for a second. So,
okay,
I mean, if you're looking at a situation from the perspective of, um, you know, whenever we tell clients, listen, let us remove it first, it's because it provides you an edge at that point, right? I mean, that's the whole basis of the whole situation and the crux behind the topic today. Because if you go and remove from the credit report, a collection company has two ways to lever against you as a consumer, right? They can either report on your they will either report on your credit, or they can take you to court, and they lever you both ways, right? Now, obviously, for most people, it stops and starts with just the reporting on the credit, but there's some people that obviously you can also take them to court if they have assets or there's identifiable assets they can lien, and that's two ways. Now, right now, we're sitting in a moratorium where they're not allowing debtors to take people to court. They're not allowing landlords to take people to court. It's a moratorium as a result of the virus, and that goes on. And I have a feeling they're going to extend it for a multitude of reasons.
whoa,
So with that in mind, when you sit in a situation where you know that half of it's off the table, and you know that the idea behind them taking you to court for this debt is no longer present, and then you say to yourself, okay, well, at that particular point in time, at this particular point in time, all these banks are inundated. These banks and collection companies are just inundated with debts right now. I mean, they're doing workouts left and right, which is why you're seeing situations like American Express, where they stopped most of their business lending. They've taken sales reps who were previously sales reps who are now helping on the collection side, which is why you have Chase not doing any business lending for the rest of the year.
And all this you guys could check. This is articles. This is
no. This is just these are releases they've come out with themselves. I mean, these are situations that they've. Chase was the first one, and when the market tanked in March, that came out and said we've cut off all business lending till the end of the year. Right? I mean, they literally stopped, and they're making their money on the PPP stuff, which the government is backstopping, and it eliminates them from taking on any further liability while they work out existing liability, right? Which is all these people that unfortunately have run into situations and they're not capable of paying, or they're trying to defer, or they're trying to do any number of things. They're having to bulk up their base in order to be able to do that. But if you keep all that in mind and you say to yourself, okay, if you know all that, you know Capital One is inundated, Discover, all these particular banks, right? They're inundated with people that are calling and trying to renegotiate, and you're sitting there with a collection with them that's about to get rolled off. Well, this seems like a pretty opportune time where you can start to put the leverage back in your favor, right? Now, the idea behind what I was saying earlier is that when a collection company gets a credit from you, and we remove gets one of your accounts, and they're trying to extract from you, and we go and we remove from the credit report, then you get a little bit of leverage, right? Because you've removed half of their leverage, which is reporting against the credit report. They're aware when they come off the credit report. They know when they're coming off the credit report. So normally you'll start to get letters from them that'll say, we'll take a 50% haircut, 60% haircut. You'll start to see the numbers get up higher and higher and higher as a result of the fact that they know that they're going to come off the credit report. And then the only alternative at that point is either eat it, or the debt, the debt will ultimately become worthless because they have no intention of taking you to court. Now, if it's a situation where you're somebody that just wants to put it to bed, because like you said, Gizzy, if you pay it, that it puts it to bed, right? So if you have a collection, you know definitively that thing's not going to represent itself or get resold. Now, a lot of times when we're working on files, very small percentages of the time you'll see debts resold. I mean, we typically tell clients 5%, and then when we move it the second time, the possibility of that happening again, there's no third day and fourth day market of the debts being able to, or of buyers of those debts that can't report, because again, that's a large majority of their leverage against you. They don't take, Midland Funding buys 100,000 collections in tranches, right? They're not taking 100,000 people to court, right? Each tranche they get, taking a very small percentage, because it costs them money to send people to court. Even if they have attorneys on retainer, it still costs money. There's court costs, and that stuff adds up when you're dealing in it's a law of large numbers, right?
But aren't they also a publicly traded company?
Say that again?
Aren't they a publicly traded company?
Portfolio is Midland. I'm pretty sure they are, but I mean that doesn't mean that they want to waste money though. Think about the line item on that, right? If you're Midland, I know Portfolio has hundreds of millions of dollars outstanding debt, right, that they're collecting on, right? That could be the equivalent to 15, 20, 25 million people, potentially more, that they're collecting from at any given time.
Whoa.
Imagine how much it would cost if you went to court. Every court is a different cost. There's court costs whether you win or lose the case. To file, to pay for it, to do all this stuff. So when you start to add that up, that starts to become costly. So you start to be more specific about the people you take to court, right?
Yes.
Because of those costs, whether you have an attorney on retainer or not. If you're a smaller collection company, you don't have an attorney on retainer, then you have to factor in the cost of the attorney, whether they're going to work off of a commission or they're going to work off of a flat fee, right? Or if they're getting paid a salary. All these things come into play. The point I'm trying to make is very small percentage of people get taken to court. It's a very small percentage, right? And especially now with the fact that they can't take people to court, they're stuck, right? They're stuck. They're in a very uncomfortable position for debt collectors right now, in the fact that, and originating creditors, even, Capital One. 2 weeks ago, I settled debt for 18 cents on the dollar with Capital One for a client.
Whoa.
18 cents. And that literally took me, 45 minutes. I fought with the front level rep first, and they gave me a manager, and we worked it down to 18 cents on the dollar.
Whoa. Okay,
so you're dealing in a situation where, like, they're in a situation where they want to put a lot of this stuff to bed because there's so much of it, right? And they know that their golden shoot, which is typically like, look, if you're somebody they think they can lean, or that you have assets and stuff, and they know that they don't have the ability to take you to court, and quite possibly for the foreseeable future, there's a very real possibility that moratorium could drag on a little further. Things haven't improved for Main Street. Things may have improved for corporate America, right, so far, and maybe they're breathing again. Maybe they have a pulse again. But the reality is Main Street hasn't changed, right?
Well, didn't they say there was an article today or yesterday about Chase, seeing $2 trillion in deposits?
Yeah, but you got to, first of all, that was on CNBC. And the thing is that's a loaded statement, right? I mean, a lot of that was from if you go through and you actually break it down, a lot of that was from money being freed up through BlackRock and stuff like that. So it wasn't a small amount of it was consumer accounts.
Okay.
You know what I mean? Like that wasn't something where it's like the consumer is just rolling in it right now. It was people. It was companies like BlackRock. I don't know if you're familiar with BlackRock. Is an enormous.
Yeah, my one of my best friends is vice president. He's an accountant in New York City for them.
Yeah, they're an enormous venture company, and they do all kinds of funds and stuff like that. So anyway, them and KKR is another one, I believe, that backs them. So they're bringing in a bulk of that money, which has nothing to do with the individual consumer or any small businesses on Main Street, right? But there is a very real thing going on right now as well, with the fact that you're still pumping out disaster loans. They're still flooding the market with liquidity, right? The Fed is, through the PPP loans and through the disaster loans. The problem is that
EDIL.
Yeah, the economic injury disaster loan.
But
but the reality is that they're just throwing enough money to kind of keep the boat above water, right? That doesn't prolong the inevitable, though. If you're a restaurant, you're not capable of operating at 50% occupancy because you can't do it. It's not going to change that. I mean, do you think that by the end of this year we're going to have 100% occupancy in restaurants? No, we're not. It doesn't matter. We're not going to have a vaccine by the end of the year. So that means that any restaurant that can't operate on a good day at 50% occupancy, they have to figure out a way to get through the year, right? And hope that at the beginning of next year something changes and then they can reinstitute things. So the point I'm trying to make is that when you take all that into consideration, now is a good time to go back and start to work these things out with a lot of these collection companies. Because if you do have debts, like the example I was telling you about today, a client of mine.
Here's the example right now.
Yeah, a client of mine was he used to be a CEO of a very large company, very well-known company in the United States, right? And he made a lot of money. Him and his wife, I work with their whole family. They made a lot of money during that period. And then, once his contract ended with this publicly traded company, him, much like a lot of other people, when the income went down, they were levered up pretty high because he made, a couple $1 million a year at that particular point in time. And then when he got in the private sector, he started making less, except their spending didn't stop, right? I mean, they didn't adjust their spending, which a lot of people in society are guilty of. as a result, they ran up a lot of credit card debt over that period of time. And during that period of time, it became a situation where they continued to lever on their credit cards, even though they were making less money. Cool. Now, we got to a point now where they ran up close to $200,000 in credit card debt, right? And they're getting near retirement age, and they're like, we can't, there's just a situation where we got to get rid of this. There's no end in sight. And it's just, you're talking about on $200,000, the minimum payment is $5,000. Whoa. Just the minimum payment.
The minimum payment is always based on the prime number, 2.5%. Okay. 2.5%
of whatever the outstanding balance is. So,
they were sending minimum payment of $5,000.
Well, they were spending a lot more than that. They still make a lot of money, just not as much as they were before. So that was the minimum on that. Just to give a point of reference on that amount is $5,000. They were spending a lot more than that. But the plan we put together, because there was just no way they were going to get out from a base. We did a whole financial breakdown. There was just no way they were going to be able to get out by the time they want to retire. So they're using this as an opportunity, which we've been working on now for a little while, going into the virus, where literally we're going in and we're settling these things 20, 25 cents on the dollar right now. Wow. Across the board. So in essence, they're going to take $200,000 of outstanding debt. They're going to end up settling for close to $45,000, $50,000, and that's going to be that. And now they're going to go that $200,000 that they were going to, effectively be carrying around like a anchor to their leg for the next 15 years. Because even at $10,000 a month, you're still not putting a debt in it, because of that $10,000, $3,000 is interest, right? $3,500. So even if you did that, it would take probably 10 years to pay it off, and in that situation, it's soaking up so much liquidity, right? So, they're on larger scale example, but it's an example where it's absolutely doable.
How do you speak to a person like that? Like, when do they know it's bad? Because we see people who have filed bankruptcy for $18,000, but yet these people, what's the conversation like when you speak to someone?
These have been clients of mine for a little while, so I've cleaned their stuff up. I've cleaned their, I do with the whole family, right?
Okay.
So they got kids, and I've helped them, and so this was a situation where they've come back periodically. I helped them in other areas as well, and then we got to the point where we started breaking down, because I'm very familiar with the situation. We started breaking down what the options were going into retirement, right? Like, what are their options? And the one thing that kept, presenting itself was just this massive amount of credit card debt, right? Because it's not secured debt. It's not like a piece of real estate, right?
Correct. So it's not good debt.
It's not good debt at all. I mean, look, real estate debt is good debt when, there's equity in it, right? Correct. And even in situations like that, it's still good debt because it can appreciate over the course of time, assuming you did, assuming inflation tracks something reasonable. In their case, though, this kept presenting itself, and they wanted to try and see if they could work it out over the course of time. But as years went on, it didn't get any easier, and that kept getting older. People get older. It becomes a situation where you want to start to be able, when you're in your mid-50s.
And the years come like this, Jay.
That's what I'm saying. So they want to be able to start envisioning that retirement, and there's no way that they were able to start to be able to envision that retirement with $200,000 in credit cards, $6-7 grand a month going out for credit cards, right?
Yes.
I mean, that's a $2 million mortgage payment, right? $7 grand a month at 3%, 3.5%. That's effectively what they were paying on credit card. That it's in a lot of cases more. So we had to basically restructure. But the fact of the matter is that, like, these, and it's going to work out almost exactly as we planned, right? Like, it's exactly how we played out. It worked out really well that it was all brought on around the virus, and the virus is actually assisting greatly because of the fact that the lenders are willing to acquiesce. They're willing to acquiesce because of all the reasons I explained earlier. They're in a position right now where, they're in a very uncomfortable position right now as a lender, because they don't know when they're going to be able to start taking people to court again.
Yes.
Which is a large majority of that's their heavy hand. Their soft hand is just reporting on your credit report. Well, when you remove both, then what is that debt? That debt is a worthless piece of paper at that point, right? Because if you can't act on it by taking them to court, and you're not reporting on the credit report, what can you do?
Yes.
Seriously, what can you do? That you can't do anything. That's the limitations on a debt collector. You can't garnish wages because you get a judgment to garnish wages. You can't go into their 401k because you got to get a judgment. Well, you can't even do that anyway. But you can't attach to their paid off property because you need to get a judgment in order to be able to do that. You can't get a judgment without going to court. So if you remove the enforcement action of what they're trying to do, you remove their ability to collect. And at that point, once you realize that in this particular window of time, now I'm not saying when that moratorium lifts, that they're not going to go gangbusters on taking people to court. Don't misunderstand me. I think that that's probably going to be something that they're going to catch up on, and it could potentially happen. Do I think a judge is going to be sympathetic to it? When it comes to creditor court, the judge plays a very small part in the situation, right? It ends up getting worked out outside of that if you do go to court, and if the collection company's attorney tries to push you, go to a mediator. As long as you can prove that they overlent to you, I mean, you can get better deals going to court sometimes than you can if you're calling one of these collection companies naked. But at the same time, this is an ideal time to be able to utilize that for that reason. There's very few times in the history of our economic cycle that you're going to be able to see situations where the creditors kind of have their arms tied. Right?
Whoa.
And when people realize that they have more position of leverage in that, not only are the tables kind of evenly set right now, but it's kind of slight leaning in the favor of the consumer at this point because of the fact that, and I don't tell people not to pay their bills, right? That's not how I do it. I try to
correct.
I give people all the right amount of knowledge to make the decision that they want to make, and then they can move forward accordingly. And in situations like this, if you decide that you want to go at settling these and you just want to put it to bed, you don't ever want to have it revisited, now is the time to do it, because you're not going to have a big window like this going forward. It's just not going to happen where you have them kind of bent over for this period of time. It's just not going to happen. Look, the virus is going to be around for a while. I think this whole thing's going to unfold for a while, but I don't think that means once that moratorium is lifted, it's almost like the way when we had the crash in 2008.
Okay.
The modifications came up for multiple reasons. One, because the federal government made them.
You said the modifications.
The modifications related to mortgages came up because of the fact that, not only the Fed kind of forced them to do it because so many people were getting thrown out on the street, but they also had a backlog of foreclosures, and foreclosures don't happen overnight. You understand what I mean?
Yes.
So in situations like this, you're dealing with, it takes some time, and now there's a backlog in collections. And there's going to be more collections that come due when these offers of deferring payments expires. I mean, they can't do that forever, right? I mean, there's going to come a time when that's going to stop. People are taking advantage of it now, as they should. Deferring mortgage payments, auto payments, credit card payments. I mean, I think you can defer everything if you really want to at this point. But there's going to come a point in time when that stops, right? And when that stops, that doesn't mean that people are automatically going to be making money. That just means that whatever liquidity they goosed you up with over the last 3 months, you better save that, not spend it on stupid shit, right?
Correct.
Because that's supposed to carry you through until this economy, in their mind, starts to correct itself. And I think we all know how I feel about the fact that I think this is just the very early stages of a much larger scenario that's going to play itself out. So I just don't see, I don't see there being as many opportune times as now to try and get it settled if your intent is to settle it. If you're somebody that wants to walk away, it's, and doesn't intend on even addressing it, now is probably, if something was sitting in collection right now, I mean, I think that it could continue to get brushed to the side just for all the reasons I said above, because they're just so overwhelmed right now, and they're not in an economic position right now to hire people, right? Like I said before, Amex is taking sales reps and they're bringing them over to the collection side because they don't want to hire. And Amex doesn't sell their debts. Amex basically repurposes their debts and has collection companies service them on their behalf, but they're also doing things in-house on those charge cards where they have to work out hardship scenarios, and they're moving sales reps over to do that because they're so inundated with it. If Amex is one example of that, Chase is another example of that. You can rest assured that all of them are experiencing the same thing. Chase is the biggest lender, they're the biggest bank in our country. Amex is the biggest credit card issuer as far as I know in our country. So you're talking about two of the big boys, the two of the biggest boys that are literally in loss mitigation mode. They're not doing any new lending on the business side, and they're in all loss mitigation mode. So that's tell you that there's just so much coming at them right now on that side of things, and they're trying to figure out how to stay in front of it. And that works on your behalf because you just become a small number at that point in a much larger swath of numbers, right? And that works to your favor in an effort to try and put it to bed rather than try and really drag it out.
But for the regular consumer, for the regular consumer who owes $20,000-$30,000 and is not, part of what is it, Section 500 company?
Fortune 500.
Fortune 500. It's not part of a Fortune 500 company. It's hard to trying to settle $30,000.
But hold on, you gotta understand him. He wasn't the one doing it. I'm basically, they're not the ones calling up and doing it. I'm saying in general that they could do it. The wife does a lot of the stuff because they basically work through and everything. So we work in conjunction in an effort to achieve the goal. But I'm saying that individuals can absolutely do that. It's not, I mean, you don't need some MBA from Harvard to be able to understand. This is why we're trying to educate in regards to what, what you as a consumer are capable of doing. And if you understand the rules of the game, meaning this game, the collection game, then you understand where the leverage sits, right? I mean, it's like any game. It's like a board game. You know what pieces are most important, or in a video game, you know what areas are the most important to be able to do it. Well, when it comes to collections, there's two pieces that are important. That's credit report, that's taking you to court. That's their two weapons. When you extract those two weapons from the conversation, there is no conversation. They can call you and beg you to do it, but I mean, I don't think there's a lot of people in our country that have sympathy for collection companies and original creditors. So I'm telling people that they should use that to their advantage, be patient, and wait till the number that they want to offer. What we've been having the client that I just described to, and I'm only going back to them, is that when the people call and say, listen, this is the number you're going to get, and every month that this goes on even further, and the economic situation changes, that number could go down. Mark it on the account, so if they do go to court, they can let the judge know that there was an offer made. It was an offer in good faith based on their economic situation at the time, so that you can prove you were trying to do your best to settle it, right? Now, it doesn't necessarily mean you're giving them 100 cents in the dollar. If it's a $10,000 debt and you're like, look, I'll give you $3,500, I'll pay it out to you over 24 months. That's the best you can do at that time. It's like $180 and you get a 35% discount, but they can't take it. That's what you can afford at the time. You understand what I mean? And that's what your finances will allow for. There's a very real thing that goes on with collections and credit card companies because there is no underwriting required on it, where they overlend to people constantly. They constantly overlend to people, right? Relative to their income, relative to their expenses, right?
Yes.
So you're dealing in a situation where you're overlending to somebody already. They're constantly getting pulled into court and they're getting called out for that. If you lend, $100,000 of credit cards to somebody who makes $16,000 a year, where's the problem sit in that situation?
But what's the benefit of a bank to over leverage themselves like that? Because at the end of the day, the bank never loses, right?
They make 18% on credit cards. It's like auto loans. There's people now that have 2 or 3 auto loans.
Yes.
There's no documentation. It's the low-hanging fruit. It's always been the low-hanging fruit. Most credit cards are done algorithmically. There's not a human being there getting a full financial disclosure. The individual states what he makes. And, they make the approval based on that situation. There's very few lenders other than Wells Fargo where I've ever heard they ask for tax returns on a credit card. Some do if you're self-employed, right, and it's a good institution. But most of the big retail players, which are the large issuers in our country, they don't ask for that. Yeah. And they don't ask for that because they know that the average credit card makes anywhere from 15 to 17 to 18% interest. So even if they push a 15 to 18 to 20% overall default rate, they're still making money hand over fist. Right? Same with auto loans. It's the same thing. So they have the ability to be a little more flexible in that capacity, right? But the problem is when they get pulled into court, most people don't in our country. They when they get called into court, they run in the other direction, right?
Yes,
so
yes.
In essence, they're scared of it. They don't understand it, which is why we did, we did a previous podcast about, if you get served, here's what you should do.
Correct.
Right? And
yes.
The first thing that we said was, listen, whatever you do, don't ignore it.
Correct.
It's the worst thing you can do because you effectively give them, you're giving them a free pass to basically lean you in any capacity that they can. It can be going into your bank account, etc. If you show up there, you set up terms that are good with you. It's not an intimidating environment. It doesn't matter the kind of intellect you have or what level of education you have surrounding this. You come in prepared, you listen to that, you show up at court if they take you. You will be as prepared as you need to be able to work your way through that situation and into a good situation, right? Not necessarily what they want, because it doesn't always work out. Just because you took on the debt does not mean that you're guilty of anything, right? I mean, it doesn't mean you did anything wrong. If they overlent to you and you don't make the money, then they have to work out a situation where in the foreseeable future you can be able to pay them off. If they can't identify that, then that's on them. And ultimately, it ends up being a situation where it breaks down that way. I had a client of mine a couple of years ago who his only income was Social Security income and he had pension income, and both of that is protected under the law. So they took him to court. They showed up. They tried to collect. They obviously didn't do their research. It was a rookie move. They took him to court. Judge was like, you can't touch any of that. You get nothing. You get nothing. So they had to discharge it right then and there.
Oh my goodness.
So this is what I'm saying. It's like it's not always the assumption that these banks are huge and capitalized is not always a guarantee that if they take it to court, they're getting that money. It doesn't work like that. And you should always challenge it. You should challenge it not only because a lot of times they're wrong, they're constantly wrong. Think about how many layers it gets from the bank itself to the actual attorney that's collecting. It's not a one-man direct move there, right? There's clerical people in between. There's administratives on the attorney's side. I mean, there's things that go on. There's errors that are made. There's confusion that goes on all along the line. So, I mean, as far as being able to negotiate, these people should understand that they should be communicating with these people confidently, right?
Yes.
I mean, you had your original question, which is I'm giving you a very long answer to, was what should the average person do when they owe 20 grand and they want to try and settle?
Correct.
You should call up and tell them this is what you're getting. This is what I can offer you based on your situation. This is what I'm willing to extend to you. This is how long I can do it. Please put it on record. If you can't take it, okay. But at least have them put it on record for the file, and you mark it down yourself every communication you have with them. Because at the end of the day, if they do pull you into court, you have documentation of everything on your end. It's all about documenting things. You know, I'll sit. See, here's the difference. I'll sit and argue with people, right? I'll sit and scream with them and yell with them until I get what I want because I want to get it done in that day because I don't want it to drag out another day because I got a lot going on, right?
Pay attention, guys. John likes to fight.
Yeah, right. I don't want to do that. It's just a waste of time and it's just not productive. If I can get it knocked out.
John is confrontational. Okay, he's not gonna back down.
But in order to be able to get it done that quickly in a lot of cases, that's how it's got to be done, right? Now, I'm not telling everybody to go and scream at people. I'm not telling you that. But when you get
so don't go in there like a Staten Island Italian, yelling and screaming. I'll cut you.
No, but that's not. Listen, when it comes to clients, right? When it comes to any client, because these are all calling on behalf of clients, right? I'm not.
Yes.
This isn't about me. I'm calling on behalf of somebody else. And the thing that I get a lot of times from these people at the collection companies and at the creditors is that, you know, this isn't even your file. Why are you getting so upset? And you get so upset because it comes down to a situation where they play on people's stupidity, right?
Okay.
And they naturally assume when they start to talk to you, they kind of test you out to see what you understand. You know, and they try to talk to you in a certain way to see how much they can push the envelope of truth. And when it starts to become fiction. And the thing that starts to get me mad is it's like they go through the same stupid like role of stupidity, right? Like
yes.
You'll get negative reporting and then, you know, all this
nonsense,
right?
Yeah.
And then when we start getting into, all right, look, he owes you this and all these things are going on right now and I know you can't do this. And then they start to tread water and say, well, we can't take any less than this. I'll give you an example. There's a client of ours, he may be listening to this. He had hired us to settle some debt.
Okay.
One of them was a one main account, right?
Okay.
And the one main account he owed, I don't know, maybe like 10 grand. And I had to send over the power of attorney, communicate with them, and we talked to them. I got on with the first guy, which was on the front side, and me and this guy went back and forth for like 25 minutes. And I said, "Listen, man, here's your offer, which was like $3,200 bucks.
Okay.
So it was like a 32 cent. If that's what the client was comfortable with. That's what I knew they would take it because I know what their line in the sand is. I said, we'll give you $3,200 bucks. That's it. He said, there's no way they're going to take it. I'm not going to present it. I said, you have to present it. This is on a recorded call. You have to present it. You can't not present it. So present it. He said, I'm not going to present it. I said, give me your supervisor. He goes, the conversation ended with, okay, please, you know, it was once I had brought in the supervisor, I'm giving the shortened version here. It was, okay, can you email over or fax over the proposal for the payoff? He said, but I'm telling you, before he gets off the phone, he goes, I'm telling you, there's no way they're going to take this. There's absolutely no way they're going to take this, but I'm going to do it because I have to, not because I want to. I said, all right, we'll see tomorrow. Right? I get a call back tomorrow from the supervisor. We're accepting the offer. When can you make the payment? Okay, so just because somebody on the front side tells you something, it's all smoke. They're getting paid on commission, right?
Yes. And
that commission is based on how much they're bringing in. And they know the more that they can bring in on these debts, the better it looks on their performance evaluations, right? On the front side of this. So if you're collecting 60, 70% on every one of these debts, you're looking like a champ, right?
Yes.
If you're the slouch that's collecting 30% on each debt, you know, you're a heel. And they don't want to look like that. So they have, plus it lends into their payment, and it lends to their compensation too, right? So it becomes a bit of a shit show, right? Like in that you get beyond that first level, then you start to get to the rational thinkers, right? It's almost like they put the front line is people that will just try to challenge your intelligence and try and feel you out. You get beyond that curve, and you get to the mid-stage charge-off, late-stage charge-off. I mean, you get a whole different vibe of human being out there, right? Because they know what the rest of that loss mitigation process looks like, right? They know how they have to start rolling them off at a certain period of time, and they know that they sell those debts for 1 or 2 cents on the dollar. And if they can get 30 cents on the dollar, and you're a publicly traded company, and you do it over 100 million people over the course of a year, that's a lot of money you put in your pocket, right?
Yes.
So, I mean, when you start understanding, the further you go back behind that curtain, meaning the general customer service, you start to be able to really, make some significant progress in settling these, especially for people that understand how this stuff works.
Okay. No, that was intense, and that's good to know, because there's so many people who are just afraid. I mean, everyone who hasn't gotten, everyone could get a credit card, but then when it comes time, you can't pay it, and it comes time for collection, and then you start getting these phone calls. I mean, we just get customers sometimes just to say, "Oh, I want these people just to stop calling me or stop calling my job." That's all they want to do.
Like, here's another thing. Like, you can send, if you don't want them to call you anymore, you can send them a letter. They're not allowed to call you either. I mean, if you can request only written correspondence, and you can literally put them on notice to cease. You can get a form online that you can send to them if you're being harassed, to where they stop. I mean, there's always a chess move to their move, right? It's just people don't know it, and people's natural reaction is to run from conflict rather than to meet it head on, right?
Mm-hmm.
And the fact, and if you meet it head on in a lot of these situations, you realize it's not nearly as bad as your mind had invented, right? Because either you read it online or somebody painted some very grim picture of what their interpretation of what would happen if it played out is. It's not nearly. I mean, the more you can understand, like I always say with all these podcasts, the more you can understand the rules of the game,
yes,
the better you can become at the game. You don't have to be like me and get into screaming matches on behalf of customers with dealers and collection companies. We do that because we care about the client, right? We do that because we want to do our job. We want to do it effectively. We want to be efficient about it. You can do it in a calm demeanor. You don't need to be aggressive back at them. That doesn't get that many closer. It's just sometimes for me, it can expedite the process a little bit so we can move things on, right? But in the general sense, that doesn't mean you need to be that kind of an aggressive personality in order to be able to get things moved along in that capacity. You can do it with a very mellow, chill scenario, just with the understanding of what it is you're trying to accomplish and when you're ultimately going to arrive there, especially when it comes to the settlements.
Well, we got some people who right now, because of the Rona, are business owners, and they got in some debt and they want to settle it. So I don't know if you got the question by Chris Fotomaras today.
No.
Okay, good.
He
asked. No, he asked. No, by email. Well, I spoke to him through Instagram, so I told him to email us. But he asked a question here on Facebook. I have a business loan that I deferred due to Corona. Is a hard loan. I talked with them today to get more time, and they said if I don't get back to payments, they will charge off the loan. I won't let it go there, but my question is how this will affect my credit if it happens, and what are the options are to avoid it.
Okay, so let's back up. Who is the business lender?
Who is the business lender, Chris? He said it's a hard money loan, Jay.
Like a cash advance?
Is it a cash advance, Chris?
An advance type loan, like a merchant cash advance, or just an advance type loan, if that's what he's talking about. Unfortunately, their mitigation scenario is totally different in the traditional sense, right? They're not, some of these, every cent of capital they put out there, they need to know where it's going, right? They're not capitalized like a Chase Bank worth, $3, $4, $5 trillion, right?
Yes.
So, I mean, their situation is entirely different, and they're not bound the same way by the Fed. If Chase came out tomorrow and was like, you know what, man, I'm not following anything the Fed wants to do. I want to start collecting now. You guys start paying me now. It's going to look bad on their brand, right? When you're a merchant cash advance company, you're already banging people over the head for who knows what interest over who knows what short period of time. I'm not sure that the reputation is really something you're that concerned about, right? And if there is a reputation, it's that you want your money and you want it now, which is understandable. So he may run into some problems trying to float it any further than that. I don't know how they would charge their loan off if that's the kind of company it is, though, because typically speaking, those loans getting charged off. Who's going to buy that debt? I mean, what debt buyers coming out?
National funding. It's called national funding.
Yeah, so I'm assuming it's probably an advance company.
Yeah.
I'd have to check. Now, if it was, the thing is, though, is if he personally guaranteed it.
They do have his SSN.
Say that again?
They do have his Social Security.
Okay, so if they, if he personally guaranteed, let me see. I'm looking on their site right now. I think I'm pretty sure that it's an advanced company, but I'm just making sure so I can answer his question right.
Yeah, look it up.
Yeah, I'm pretty sure. Connects. I don't know. I'm pretty sure that's what it is. So I'm gonna work at Facebook on that without.
Axis Bank is called Axis Bank. AXIS Bank.
Right. So just as, is he paying a monthly fee or is he paying a daily fee? Or is it based on receivables? Is that what he's paying on? That's what I'm trying to ascertain. I mean, the bank itself is irrelevant, but trying to see how he's paying it back is where I'm trying to figure it out. But look, in any instance, whether it's a traditional retail bank or it's a smaller bank, when you personal guarantee a business loan, and this is where people get a little confused, generally, broadly speaking, is that when you personally guarantee it along with the business, well, then it doesn't show on your personal credit report while you're paying on it, right? As long as you pay it off, whether it's a credit card, a loan, an auto loan on the business, in most cases, you're not ever going to see it on your personal credit report. But the
daily, Jay. So yeah, it's a cash advance.
It's an advance. So yeah, I mean, they operate on a different scenario. So as I was saying, when they charge it off, then you'll see it on your personal credit report. So it's going to come over and it's going to claw over to you on that side, which obviously for a lot of people becomes very problematic, right?
Yes.
And it becomes a situation where now you got to get off your personal credit because it's carried over to your personal credit, and in essence, has really costing you disruption. So this happens with any kind of creditor, though, whether it's Bank of America, they all do the same thing. Amex, same deal. You know, a lot of people that have those Amex business charge cards, realize that after the account gets charged off, they see it show up on the personal credit report, right?
Correct.
Because that's ultimately what ends up happening when it goes to loss mitigation. In these kinds of situations, if it is a larger bank that's doing it, my guess is that it's probably going to be a typical course of action. I'll eventually see it if it does get charged off on its personal credit report. They may or may not resell the debt. They may have a debt buyer for it if it is like a formal bank and not an individual, just a small merchant cash advance company. They may have debt buyers that are going to buy it. I don't know. I just, if he could pay it, I would advise it. Although I think that trying to modify those terms, if you go back, if he's under a little stress right now as a result of the virus, and going back to them and say, listen, I want to make good on this, but they're going to have to change their terms. I think if it's a real bank and it's not some individual that's behind a desk who's counting every dollar that's coming in and going out,
correct,
which happens with some of these merchant cash advance companies, right? They might have $4 or $5 million to put on the street. They know where every one of those dollars is at, right? Correct. Not that that's a small amount of money, but in the grand scheme of a fund, it's on the lower end, right?
Yes.
If you're a bank, they may be willing to lower those terms and spread them out over the course of time so that it can be more sustainable and manageable. I mean, I've also seen that. I did a workout with a client 2-3 months ago. She had 2 merchant cash advances, and we had to do a workout with both of them. And the one lender was willing to adjust the payback terms down, and the other one we had to work out a settlement amount. But it wasn't, it wasn't.
So you still talk to them on behalf of the customers?
Say that again?
You still talk to them on behalf of the customers?
Yeah.
You still
use them? Yeah, because in these particular instances, I'm not crazy about just settling accounts, right? I do it on a broader scale just because it's a lot of energy and getting these people on the phone and stuff and doing it that way. But if it's part of a broader goal, like I explained earlier, and
yes,
it's a giant picture we're putting together, you got to do what you got to do, right? I mean, if that's what we need to get to the goal, that's what you got to do to get to the goal. And I'll do it. And I have no problem doing it. It's just in situations like this, though, a lot of clients should be aware that they can do it on their own, though. I mean, outside of just having the general knowledge of how to do this, that's a huge part of being able to get this stuff taken care of, and knowing that there's a possibility that you can do it, right?
Do you think though it'll work the same way with a hard money lender like this than a
that's what I was
regular
just
bank?
saying. I was saying that I literally did the same thing with a client who had 2 merchant cash advances. I did this a couple months. She was paying like $360 a day or something, and we were able to knock it down to a flat fee a month. It was like $2,000 a month. So she went from almost $8,000 a month down to $2,000 a month. Now they had to spread the terms out, draw it out, but it's because she couldn't do it, and they wanted to maintain the relationship, right?
Correct.
I'm not saying that's a success he's going to have, but I think that if it's something that's unsustainable for him at this time, and given the fact that everything going on with the virus and everything is completely understandable, you may get some sympathy. You may be able to get that payment down. You may be able to get the payment down significantly if you can prove it. So, I mean, there's no downside in trying. But if they're threatening you at this point that they're going to charge it all, and you do have the ability to pay them something.
Chris says he'll send over info.
Okay. Well, that's where I stand with that.
Okay, Chris, you're getting your question answered. Okay, so let me see. Mike Tyson says, I have a collection I paid 2 years ago, but the collection company won't take that collection off my report. Then he says, I have challenged the collection and sent notarized letters, and nothing works to get it off. What can I do to get it off?
Well, I mean, we don't tell. I mean, listen, we go all the way up to the line, but we don't tell people how we do what we do to get these accounts off. As far as like him dispute, well, obviously they're not required to take it off, and I think a lot of people that go on credit boards and read all the nonsense that's perpetrated and percolated through there, like just write goodwill letters and everything comes off, and just send them these responses and that'll fix it, and none of it ever works. Once people come to the conclusion that none of that stuff they find on credit boards ever works, then they arrive at the conclusion that, okay, now I need to learn how this stuff works. Well, the problem is that when you've paid it, as like he said, then you got to be able to identify how you're going to get it off. And that's a good example of what we said earlier, where when you pay a collection, A, it doesn't remove it, and B, it doesn't jump your score. It just stops the bleeding on that particular collection. We'd be happy to remove the collection for them, but unfortunately, we don't tell people how to remove them. At least, we don't do that ever, but we're not, we like educating, but we also, our system is proprietary, so, we're not gonna break that down, fortunately.
Okay. But, $99 do-it-yourself credit repair system could definitely help you out in disputing it.
Yeah, I mean, I think that would help if there's only one collection on there, and that's holding them back for sure. He or she back, then for sure, yeah. I think the $99 system will be good, because it sounds like they've already tried a multitude of other areas to try and do it, and it seems like it's come up dry, so it might be worth giving it a shot.
Okay, then Andrew Johnson said hello, and I asked him how is life living without police, and he says, man, they are still out there. They haven't defunded them yet or abolished them, just certain restraints on them. Okay, he lives in Minnesota.
No, that's crazy.
Yeah,
I mean, that whole conversation is I mean, that's crazy about the defunding the police.
I mean, yeah, but if you look at Capitol Hill, what's going on over there in whatchamacallit, in Seattle, and what economic, what is this? Is that a socialist state now? Is that a communist?
It's not socialist. Who knows what that state is? That state is a disaster. I mean, I certainly encourage everybody to have their free
no
speech.
police. John, they had a paramedic there, and the paramedic didn't get out to save the guy who eventually passed away because
they had more than the paramedic. They had a whole slew of cops, and the paramedic came up, and they wouldn't let him in. And they, obviously as a result, I think it was a 19-year-old that got shot. We're in a very, 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 very delicate state as a country. We're in delicate state as a country. We're in delicate state as an economy.
Yes.
There's a lot of people in this country whose mental states are very delicate right now as a result of being stuck in their house for 4 months straight, and they're just now being able to breathe fresh air.
I went outside the other day, or where was it? Saturday. I went to get a couple of sangrias, and I felt good.
That's what I'm saying. It recharges the battery, being able to get outside, right?
Yes.
Being able to get out, get some vitamin D, get assuming the sun was out, just get all that going. But I mean, you figure a lot of people in their house, especially in the Northeast, for 4 or 5 months, man, their mind starts to play tricks on them, man. It's just how it is. And you're seeing a lot of that. I've talked about this when I first got back to Philly, and then when I left Philly, and everything like that. I just think people getting out and being able to just recharge a little bit, I think will help. And I think it'll help in a multitude of ways. As far as Seattle's concerned, I don't know. They're not even. I mean, the mayor's not even interested in addressing it. So if they're not willing to address it, then something will eventually come to a hill over there, over and above, unfortunately, what happened over the weekend. It's going to continue to perpetuate. I mean, it's only been around now. They've been governing themselves over there for like 2 weeks. Somebody's already been shot. 2 people were shot.
2 people.
So,
yes.
You're talking 2 weeks. I mean, there's not even that many people there. If you look at the grand scheme of Seattle as a city, I mean, it's not like there's hundreds of thousands of people in
This
there.
is only a 6-block radius.
That's what I'm saying. You're talking about thousands of people, maybe. And I mean, just look at just do the math on that. You know what I mean? Just the per capita in the period of time when you're taking a very small percentage of the total population of the city and you're putting it in that area, and then you're saying within 2 weeks 2 people have been shot. How do you think those numbers scale out?
Yeah.
It's not a pretty thought. So you hope that it fixes itself or something. They come to some type of an agreement with the people in the city that everybody can agree on and stuff. But I mean, without going down that rabbit hole, because I know that's a very sensitive topic for a lot of people. I think going back to what I was saying.
Yeah,
earlier,
but talking about it in economical terms, there's no economy over there.
Well, I mean, in that particular area, but look, there's not a lot of economy in any city. I told you when I left Philly, everything was boarded up. Everything was. I mean, at least in Center City,
got a point.
Rittenhouse. I mean, it was boarded up. They're just now letting people out of. And my concern is, my real concern, and I think it's a very valid concern, is that you're just now getting people out. Like New York just started allowing outdoor dining. I think it was today, and they got to be on this.
Barbershops open today. Yep.
What's that?
Barbershops open today.
Yeah, and so did outdoor dining and stuff. The problem is that they got to sit on this for a couple more weeks till they can go to full scale, right? My opinion is that, over the course of the next, 2 weeks, I think that you're going to see more cases of the coronavirus, not just Florida, not just Texas, not just Arizona. You're going to start to see it represent itself in the news cycle, right? As a mainstream in the news cycle. And there's a very real chance that you could see some of these extensions in some of these cities start to pull back, or meaning like moving on to the next phase, because New York is so heavily concentrated, right? So heavily concentrated that, it took so long to get it back to a point of, calm, right? Where it wasn't just wildfire. You light a match, like putting a match on gasoline. So if they see that happening in areas like Florida and Arizona and stuff like that, where it's more, it's not nearly as dense.
Well,
right?
Florida reported, I don't know if it's the media, well, it has to be the media, but, the other day, Florida had like 3,200 new cases of coronavirus because there's more testing.
I mean, I've seen all that. I've heard all of that. I mean, I know that I heard from my son's school over the weekend, or before that, talking about, because school's not till August, and I think they're preparing for things to pick back up. I mean, it was always the interpretation the entire time since it started is that they were, us as a country were going to get a reprieve through the summer, right?
Yes.
And that it was going to revisit come the fall.
Yes.
The problem is that there's going to be some sort of a reintegration of it, right? Because it didn't go away. It didn't get inoculated. It's not gone. So when people go out, it doesn't matter where you are in the country, whether you're in Florida or Arizona or California, etc., there's going to be a reintroduction of it. There's no two ways about it. It didn't get removed from society, so it's going to come back into society, right? They're just hoping that when that reintroduction happens, that people exercise what they were taught, the masks, the distancing, etc. But people are showing they don't do that, right? So what that's doing is accelerating the reintroduction of this and the reintegration of this into society. So hopefully the areas that are very, very aggressively and densely populated, like cities and stuff, the people are much more careful. I mean, I know it was a very seriously, like, somber mood up there when I was up there.
Oh,
Totally
yeah.
different than down here. So maybe people are going to treat it a lot different, right? And maybe that'll slow down the reintegration of it back into society. But the thought that it's just going to disappear and you're not going to see it again as testing increases, because that's what's happening right now, right?
Yes.
In all these areas, you're seeing testing increase. That's part of the reason. I'm not saying it's the entire reason. That's part of the reason down here in Florida you're seeing more cases, because there's testing sites now every 10 miles. They're everywhere. So people are, just to rule it out, are going and getting tested, right?
Oh, I mean, if you start coughing and you got a headache.
That's what I'm saying. So now that you have a place to go to test, and you can just drive down the street and get it done, and you find out in 48 hours, why not do it? And as you start to see that in other areas, you're going to see people that may have had it before, they were asymptomatic, or people that don't necessarily have the you're just going to start to see for all of these reasons, it's going to represent itself. And that's the reason why I'm concerned about, just generally speaking, about from an economic perspective. When people hear that, they're going to be like, all right, I'm back in the house, right? I'm back in. I'm not getting on a plane. I'm back in the house. I'm not traveling.
Yes.
I'm not going to a hotel. Most people are already scared to go to a hotel right now anyway. Most people don't want to get on a plane. Most people don't want to do any of this stuff.
Listen, right? I'm getting ready to go tomorrow to my wife. I told you, got 2 weeks off. We're getting ready to go to this cabin in Jersey Shore. And my wife's like, we need Clorox. We need this. We need to bring our own bed sheets. We need to bring our own pillows. I mean, I got to travel with all this other new stuff that I never, ever thought about traveling with new stuff like this.
But, I mean, it's better to be safe than sorry, right? I mean, look, at the end of the day, this is the society we live in. We've normalized it. We walk around with masks. I mean, this is what we do as a society now. And until that, the first time today I saw an article about, they were saying, it was on Bloomberg, they were saying about how they're expecting, and look, I don't take any credence in anything that the media says until I can verify it myself, but they were saying that the flu and the COVID are going to be battling going into the fall, right? They're expecting a bad flu season, and then you have that coupled with the COVID. So now it's just the fear mongering starts, right? But
yes.
There's some people that haven't gotten over 6 weeks ago, right? They're still trying to wrap their brain around what the F just happened the last 4 months, right? They haven't gone out yet. They're still not comfortable going out, but they know it's thawing. And now they're getting into a situation where they're not sure about how they're going to reintegrate themselves into society, right? And how are they going to go out and do this and do that and do this and do that? And it's just for all those reasons and all that indecision and the fact that uncertainty has not changed. Yes, people are buying houses. And just for the record, for everybody that, that thinks that the real estate market is just completely, you turn on the TV, sometimes they talk about, and you see on Facebook and all this stuff about how houses are just selling hand over fist.
Yes.
Today was the year-over-year report of existing home sales. It was the worst in the history of our country.
You hear that? You hear that, my people? All those people on Facebook and Instagram, all right, that say, oh, I'm selling houses. But
no, they're selling houses, but broadly speaking, from a broad economy purpose, year over year was the worst number in the history of our country since they've been measuring it, which goes back like 30, 40 years.
Whoa.
So that tells you that we're down the largest percentage year over year as like the amount of sales that went on last year versus this year. The drop was that exponential, right?
Whoa. I mean, it has to do with COVID. I mean, come on.
It has everything to do with that. But the point I've been making since COVID started to the point I'm making now is that that's not going to change. Right? Like I understand some people are just buying because they couldn't care less about COVID. I get it. I respect your ability to just compartmentalize and do whatever you want to do. Some people have to buy, like I've been saying forever. There's a certain level of demand that just always will exist in markets, right?
Yes.
There's always going to be either they got to move, their family has to move and they have to relocate, or they need a bigger house because they're having a kid. Things that force them that it doesn't matter what's going on exponentially. They have to buy because they're under a timetable, right?
Yes.
People like that always will allow there to be a market that exists. And the reason why it's working right now is because the supply is low, right?
Correct.
So if the supply is low, for instance, let's say there's 10 houses for sale, right? Total. Because in some areas, there's not a lot of houses for sale. Because people stop putting houses on the market because of the fact that they didn't think their house was going to sell, right? Why waste the listing?
Yes.
So let's say there's 10 houses for sale and there's 15 people, buyers, which number one, it's not a lot of houses for sale and that's not a lot of buyers in the market. But let's just say of those 10 houses, 3 of them are disgusting, right? They're just messy, they're old, they're dated. Disgusting isn't a good word, but they're just not up to what you would want to buy as a brand new house, right?
Correct.
So then that leaves you 7 of them that they're looking at. Of those 7, from the bottom to the top, the price deviates, very little. And let's say there's 2 or 3 that everybody wants of that 7. All 15 people are going to fire at that 7. Whereas in a normal market, there wouldn't be 10 houses. There would be 65 houses, right? For those same 15 people. And what would ultimately end up happening there is you'd see values come down, because in the instance where people are selling is because the supply and demand right now, the supply is low, the demand, even though it's a small muted demand, it's higher than the supply. When the supply gets back, when we get to a point where people realize they're not going to get their jobs back and the economy isn't going to come back and they're going to be forced to have to sell, you're going to start seeing the supply pick up, right?
Yes.
And that supply is going to start to outgrow the demand, even if it's a trace demand, like it's been a very small amount of demand that's going on. You're going to start to see the supply outlast that, which is going to force prices down. And then as things languish and over the course of time, as that goes on, that's what helps to drive the prices, supply and demand. I just don't believe, with unemployment where it is and the expectation of where it's going, that you're going to see over the course of time. I just don't see demand exceeding supply. I just don't.
But Jay,
I just don't.
That's one point. But how about when the government gets involved, like Fannie and Freddie? Can they get in and be stricter with the rules in getting a home?
They've already started. Well, I mean, look, they can, right?
Mm-hmm.
They absolutely can. But they normally, like if you're FHA, they normally do it once a year at the beginning of the year, right? And we explained this in a previous podcast about the lenders that, are saying that FHA moved to 640. No, it didn't. It did never do that. That's specific to your lender and your lender's ability to resell that mortgage and the credit with the buyers of those mortgages in the secondary market. That's all that's associated with the liquidity surrounding that. But yes, they absolutely, Fannie and Freddie can tighten the requirements for sure, which will also add to the difficulty for getting a mortgage, right? Which will also lower your demand because it's going to be harder to get a mortgage. But if you extract that, just take that off the table, which is a good point, but it's true. But just take it off the table,
okay.
And you just use round numbers, and you say that January there was 10 buyers that were sitting in a buyer pool, and we've now effectively lost 2.5 of them from unemployment and continuing claims, right?
Yes.
So now you have 7 people that are meant to do the same thing that 10 were doing, right? And now you're telling me of those 7, right? You're basically having a lot of people that are going to be making, let's just say 40% of them are going to make less money, right? Because they worked at hotels or resorts or gig economies or bartenders or anything like that, right?
Yes.
Waitresses, they're not going to have as many hours. They're not going to serve as many tables. They're not going to be able to turn as much money, and that's not going to change. So now you've taken that 10 and cut 2.5 off for unemployment. You've now cut 3 off because they're part of the gig economy, which represents 15% of our total population. Right?
Yes.
And that leaves you with about 4 buyers, which are supposed to take up for the 10 you had in January. Explain to me how that's going to play itself out.
Oof.
We're not growing as a country like that, right? We don't just have people growing regularly. We're not like China. We don't have 1.4 billion people. We have like 400 million people in this country, right? Just do the math. The numbers explain it. It's not if, it's when, right? Assuming that they can't get their act together, we don't get a vaccine by the end of the year.
Correct.
It's just math, and there's no way that 4 buyers of houses are going to be able to satisfy the demand that 10 used to satisfy. That goes for everywhere too, by the way, right?
Correct.
It's just with mortgages, there's a heightened level of documentation required, right? Like with automobiles, it's like no doc, right? Credit cards, restaurants, none of that stuff is as focused on the documentation requirements as a mortgage, right? So it's even more difficult, especially if somebody walks into it over levered, and let's just say, like we talked about in the past, the debt to income requirement drops, right? And they can't lever as high as they were before. Just that could change it. It's a lot of things that would all just accelerate it. They're trying not to accelerate. They're trying to do everything they can, which I get, to try and put as much liquidity into the system and hope that liquidity is going to be able to prolong here until things get back to normal. It's difficult for me to envision that with the way things sit right now. And honestly, I've been saying this since March, and we're now sitting here almost in July, and there hasn't been 1 ounce of change.
Correct.
And from where I'm coming from, but also from the general economy, right?
And even your thing about Fannie and Freddie, even if they don't do anything, and even with interest rates being so low, right? It's still demand is low.
But here's the thing: everybody will go back to every agent you talk to in this world, because this is what gets them to sleep at night. Will say interest rates are low, right?
Yes.
So if interest rates are low, asset prices will continue to at the very least, they'll stay the same, right?
Mm-hmm.
The problem is there hasn't ever been a problem with supply and demand when interest rates are low, right? There just hasn't been a problem with it because there's always a certain level of supply because we weren't running 30% unemployment.
Correct.
When you're like I keep saying, the unemployment issue is enormous when you're dealing with a loan that requires documentation to get it.
Yes.
You know, you have to be able to document you're employed. You have to be able to document you have assets. You have to be able to document you've been employed for a period of time, right? So you naturally just take the unemployed people, 2.5, 3 people at this particular point in time between claims and the natural unemployment level, and you take them right off the table. So that's basically, like I said before, you coming back and saying that ultimately what's going to end up happening is that those 7 people are going to make up for the 10 that was there before. You know, that's not going to happen. It's not possible to happen. 7 people can't buy the same amount of houses as 10 if they're primary, just regular residential primary homeowners, right? Investors are a different conversation. I'm speaking from a primary issue at this particular point because that's the driver of our market.
Yes.
And it's going to be very difficult. Now, whenever that point gets to where the supply and demand start to unravel, which it'll eventually happen, right? However long that particular is, that's when you'll start to see things change a little bit, right? And, you know, until then, it'll continue to tread like we're doing right now.
I haven't seen lately. I mean, even with those 4 people, though, are we going to see this sold $30,000 over asking price, $50,000 over asking price?
Like I said before, for right now, this is all great, right? This is great because even if you go in any certain market, they're not putting houses up for sale. There's a very small amount of supply. So even with a trace amount of demand, it's gonna push up because, like I said before, if there's 10 houses, there's always 1 or 2 or 3 that everybody likes, right?
Yes.
There's always that everybody's like, man, that's a nice house. Everybody wants to go for that.
Yes.
So that's why you start seeing it because they need the house and they see the one that they like, but everybody else sees the one in that neighborhood that they like too. That's why everybody's bidding it up. But once you get to a situation where people start to realize that we start to reacclimate society, people realize they're not going to make the same amount of money that they did, or the job that they had isn't producing it. One of 2 things are going to happen: they're going to put it on the market, or they're going to let it go to foreclosure, or they're going to do both. They're going to put it on the market until it goes to foreclosure, just in an effort or to try and stay. And that's how you're going to start to see things. So it's probably going to be a little bit like, if you remember going back, I said it's going to take some time. Probably towards the end of the year, early next year, that you start to see a lot of opportunities present themselves, because that's when you're going to start to see people, the liquidity that was pumped into the system from April through to the end of the summer is going to start to dry up. And then you're going to start to see people have to deal from a true cash position or whatever position that they had. And how long can they sustain that? And how well are they forecasting out if they're in a business that's not going to make it through? Now, the people that are in businesses that have no problem aren't going to be impacted, right? But that's not, again, if you just look at the fact that the gig economy, which represents bartenders, waitresses, restaurant owners, resort owners, hotel owners, that represents 15% of our economy. That's roughly 60 million people.
Wow.
Right? It's a lot of people that aren't buying houses now because they don't know what their employment situation is like. And that's just one example, right?
Yes.
So I just think, you'll start to see it. And that's why I'm saying, for all these reasons, taking care of some of these collections right now, if you got the ability to, it may take some pressure off of you down the line if down the line you expect your situation may be subject to change. That's all.
Correct. Yeah, it's tough out there, my people. If you got the money to settle it, if you feel like you up to your neck in debt, and trying to see where you're going to be at 6 months to 12 months, you definitely need to be a certain type of person to be able to see where you could be at in 12 months to 2 years. Because even us, we get customers that, even without knowing, I mean, my high school counselor, that she came for credit repair and said, yeah, eventually I want to buy a house in 2 years. But no, she got in position to get into a house. She qualified, right, Jay? She's on her way to get a house.
been with us 2 disputes. She got approved already. She's good. She's buying the house.
Now listen, I know a lot of you watch this, and a lot of you, some of you like to press the unlike button on some of the videos because you've been a customer of ours for some time. When you're trying to buy a house, just understand everyone is different in the process. No situation is ever the same. No credit report is ever the same as yours. So, but eventually you're gonna get results. But it just so happens that, you know, she fit in the, you know, in the average amount of time frame in which we could get certain people in position to be in position to buy a home, which in this time, this was
but here's the thing though, it's not, again, I mean, we're so, in every one of these podcasts and everything, I don't think there's ever a time that we're like, you know, I had a conversation with a current client late last week where I said, listen, we don't really get fly-by-night people anymore. We don't get people that are coming in and are like in and out. And if we do, those people stick out, right?
Yes.
Because you can tell just with the questions that they ask.
Oh, yeah. They come through on Instagram, Jay. You don't get to see them. They come through on Instagram for me.
Oh, you mean people that come through?
Oh, yeah. Oh, they want to buy a house in 3 weeks. They got to leave their apartment and they want a house.
Yeah, no, they definitely don't email me with that. But we don't, I mean, as far as my end of seeing, I don't see a lot of fly-by-night. We don't have a lot of fly-by-night clients, which I'm grateful for, right? We have people that are, whether it takes us 30 days or 90 days or whatever it is, they're normally good because they've committed to the process, and that's what we want.
Yes.
You know, if you're somebody that's around just trying to kick tires with every company until, you know, you can absorb enough knowledge or you screw up your file enough that nobody can help you, well, we're probably not the right company for you. So please don't bother, right?
Correct.
I mean, you're only going to frustrate yourself and you're only going to frustrate us because the people that come to us buy into the process.
Correct.
They buy in because they've been following Gizzy for who knows how long in some cases.
Correct.
And they've committed to it. And when they commit to it, we commit to them. And it's not just a cliche, it's reality. When you hear that, yeah, this person got approved, that one person got approved, that person got approved. That's not nonsense. That's not. We can give you the names right now. These are just from the last. Your guidance counselor, that was from Friday. The other 2 people from Saturday. There was another one today, I think. So it's like these are clients that are committing to the process. They're letting us do our thing. They're trusting we're going to do our thing, and then they're allowing us to guide them so they can reach the goals. I mean, they're the kind of clients that we want, right?
Correct.
I mean, it's what makes the job fun when people trust the process, and then you can show them that it was rewarding for them for trusting the process, right?
It becomes unfun and unfunny when you have someone micromanaging you on top of you for results.
Listen, it's very easy to identify somebody that is skeptical, right? I mean, they can't hide it. It just exudes off their pores, right?
Yes.
When somebody is untrusting and untrustworthy, and that's fine. Honestly, I'm not trying to judge anybody. I'm just saying when we get started with clients, for us, we like clients that commit to it because we're committed to them. So we don't want somebody that comes in and after 30 days they're like, oh man, we only removed 35% of the accounts. This is what we used to get many years ago. You know, we only removed 35% of the account, man. Somebody told me to get off in one month, man. I'm done. Well, okay, all right, man, knock yourself out. And then they come back, right? But when they come back, we don't take them back because it's the same mentality.
Yes.
It's a situation that that's not the kind of mentality we want. We want people that really want to better themselves because we want to help them better themselves. And, you know, in order to do that, you got to commit. So whether it takes us, you know, you're talking about the fact that you know, somebody might take a little longer to get it done. I gotta be honest with you. I don't really understand the philosophy in that capacity. Because if you're getting to the end zone, now I have no interest because I'm the one that's submitting these disputes. I got news for everybody. I have no interest in dragging these on, okay? I'm the one that works 15 hours a day for 6 days a week. I'm the one that's having to submit these. I have no interest more than you do to drag these out, right?
Correct.
The quicker I can get these done, the quicker we can position you to get to your goals, the quicker things move for everybody, right?
Correct.
I mean, that's the reality of it. But if you get to the end zone, whether it takes you a 65-yard bomb, right? You got to run the ball, you know, 35 plays. What does it matter if you get to the end zone?
Correct.
I mean, this is the thing I struggle with sometimes after doing this for 10,400 clients. I don't understand if you're still getting there and you're getting to your goal and you're achieving your goal. Why is it such focus on the fact it needs to get done in 30 seconds? That's the thing I have so much difficulty with. I mean, we get plenty of clients done quickly, right?
Yes.
I mean, it represents a percentage of our total clientele. And most clients, like I tell everybody all the time, based on the almost however many clients have helped over however long a period of time, which is a very long mean of very large median of people, the typical turnaround time is around 2 to 4 disputes. Some people take longer.
Correct.
Some people get done sooner. We work until we're done either way. But what is it? I don't. We're the only people I know that not only clean the credit, but then, yeah, here we'll walk you through the mortgage. We don't charge you to help you get that mortgage. There's nothing that comes back to us. We don't get paid for that.
Correct.
We don't get paid to get you an auto loan. We don't get paid to set you up with all this funding. We do that as a courtesy. So, you know, if you're somebody, that's why we say we want you to commit, because we do all this stuff for free.
Correct.
Like all the stuff over and above, we do it for free. We do it because we want you to get to your goal. We don't do it because there's some kickback we're getting from an institution. You know, we do it because we set you up with the lender that we deal with every one of our clients, because he works like I do. He works quick, he works efficiently, he knows what he's talking about, he's very communicative. I mean, there's particular people in place in this process for a reason.
Correct.
Because they're functional and capable and they're able to do what they do. So I think, you know, I just get sometimes when you deal with that needs to be done yesterday. So
yes.
Have a good one.
I know. I got Glenn Baez who said this is a long process, well, for him and his wife, but the more progress you see, the more it feels good. Going from 400 something to 767 is a great feeling. So that's Glenn, who watches us on Facebook business channel. All right.
Yeah,
so
and you know what? Look, and with Glenn's situation was one that, you know, we got to a certain point, and then, you know, some things came up and we had to go back in. But he's a great example, man. He lets us always do our thing, him and his wife. So I mean, it's just they trust the process. And like you said, he's sitting here with a 760, even with things like that occur. So I mean, you can either go the direct route and go from A to B, or you can go in the wide route. You know, we try all these other situations and dance with all these other companies and waste all this other money if they're not able to perform. A lot of times they land back at us, though.
Yes.
You know, there's people that come back after they've asked us years ago to discontinue the service. They come back because they know the service is good.
Correct.
So, I mean, try not to be that person.
Correct.
Not that there's anything wrong with that, but I mean, you can avoid the frustration, the headache you provide yourself.
Yeah, that's the whole thing, is that they don't know that they driving themselves crazy. That's the thing. Yeah. You driving yourself crazy.
They realize after the fact they should have just stayed with it in the first place.
Looking at 4 credit monitoring sites and taking, you know, Credit Karma as the holy grail.
Well, listen, I think the one good thing that's going on right now, and I think it's great, is the fact that people are realizing that for years in this business, the one counter to doing it legitimately, right, and removing these accounts was for people to just file fake police reports, file fake fraud affidavits, right? But now they're realizing that that's not working, right? So they were the people that would say, yeah, we'll get it done in 2 weeks. Yeah, we'll get it done in 3 weeks. Yeah, we'll get it done in a month, right? And that was their whole turnaround time. So people fixated their brains on the fact that they think the credit can be done every time in a month, right?
Yes.
So when somebody lobs out a number like, 2 to 4 disputes is typically our average. Oh, man, that takes so long. Okay, well, have a good day, right? But that was years ago. But now people are coming to the reality that doesn't necessarily work anymore, right? And that's not as sure a bet as it was in the past, many, many years ago, for all the reasons we explained earlier, with them beefing up their fraud departments. There's actually human beings now reviewing them as opposed to what it was previously. And a lot of them are getting shot down. And because of those situations, people are being more discerning in who they're taking, and they're doing more research. They're educating themselves, which I think is great, right? And so because of that, you're seeing the expectation become more realistic, right?
Yes.
It's not that it needs to be done in 2 weeks and jump from 15 different companies over 2 months that couldn't get it done in 2 weeks. It's okay. Let me give it a shot. Now, don't get me wrong. There's still people that think everything should be done in 3 weeks. It happens. But it's just, for us, it's not the norm. And I'm grateful for that. You know, I mean, it's just not how we run the operation, which is what I was explaining earlier. So, but I do think the resetting of expectations as it applies to this stuff has a lot to do with, you know, the fact that you're not seeing as many people coming with that. Now, you had said, I don't see it. Maybe you see it. You said you've seen a lot of people with the same, you know, the same 2 week expectation.
Oh, yeah. On Instagram all the time. Yeah, I tell people I'm afraid of speaking to you because you know, it's like you get them as a customer, then they become a headache. You told me this, you told me that. I was like, first off, I never said that. I never said that we could be done in that time. But there is a percentage of people, 5 to 6% of people who get like everything removed, which is great, is amazing to see. But everyone, like John says, falls in the middle, anywhere from 3 to 4 disputes, which is 90 to 120 days. Usually people are coming to us though, like 3 months, 4 months in advance prior to them wanting to do something with their credit, which is what, is sufficient amount of time, and they're gonna definitely see results during that time and a big difference in what their credit report look like.
That's the key, though. Not to cut you off, but that's the key. I mean, it's not like you're sitting flat after 2 months, right? I mean, you're seeing results at each turn. It's just depending on the file, where it was at before. There's any number of variables that work into it that help to ascertain and determine how quickly the file is going to get. If we're the first one to get a file, it flies by.
Correct.
The problem is we are always the last ones holding the bag because people don't want to pay us, right? We're always the last. We are the. They'll say, well, we'll try this, we'll try this, we'll try this. They try all these cheaper alternatives that don't materialize. And then they come back to us and they're like, I tried all these different companies, and now I'm ready to go with you guys. I'm finally ready. And I look and I see that there's been disputed 50 times in the last 2.5 years since they've reached out the first time. And listen, we're grateful that they come through and they stop through. And normally at that point, you've seen a lot of the underbelly of the business, so they commit to the process, right? Which I'm also grateful for. But at that time, we have to explain to them, listen, there's been a lot done to this file. You just got to sit back, be patient, and they are. Let us do our thing. And in those situations, they do let us do our thing because they've seen the other side of it, right? They've seen the other side of the coin. They tried all the other ways. It didn't work out.
Well, the hilarious thing is that when they contact us, and I see on my Google voice that the last time this guy contacted me was 4 years ago. The last time this guy contacted me was 3 years ago, and they still. I got this guy who knows Carmelo, with real estate investor that we helped. Then he contacts me over the weekend, and I'm like, somebody's calling me right there. And then uh, I'm like, he's still asking me, so how long do you think my file would take? I said, bro, you contacted me last year. We had a conversation. I have it written here. I spoke to you for 20 minutes. You asked me the same question then. You asked me the same question now again? Are you gonna start yes or no? Because I'm done. I mean,
are we ready? But normally, and in all fairness, and this is the reality, that guy probably won't start. He'll keep peaking back up, and for the next decade probably, because he just won't ultimately move forward. Human behavior is repetitive, so they'll just continue to not move forward. But that's fine, though. It just wasn't meant to be. And listen, we're not. We're a boutique service that is specific for specific people that are willing to commit to it, right? Correct. And they get to their goals. They trust us, and they're in good hands, and they get where they need to be. Some people are just not psychologically set up like that. They're just fly-by-nighters. Everything they want things in 30 seconds. And if they don't get it in 30 seconds, their frontal lobe changes.
Correct.
I want a house. I want to get a house tomorrow. Well, do you even make money? No. Well, then how are you going to get a house? Right? Okay, well, then I want a car. Okay, well, do you have a credit score? I don't know. Okay, well, that's great. So what's next? Let's keep working down the line, right? I mean, it's stuff like that. So it's just a matter of just, like I said, I'm very grateful for the clients we have now and the clientele that comes through to us and the perspective. And I think all of the videos and these podcasts and stuff help to just, let people know what we're about. In a lot of cases, that does a good job of weeding out maybe people that aren't necessarily aligned with how we operate in the first place, right?
I got more questions, Jay. We're gonna move quickly through these. Can you sue the one Genesis project? Boom. He or she always comments on our stuff. They love our videos. Okay. Can you sue them if you gave them the notice and they keep calling you the cease and desist letter?
Cease and desist. And I don't know how. I'd have to get a better idea of. You sent the letter, but did you send it certified? Do you have confirmation that they received it? What was the letter sent? Was the letter addressing it properly? I mean, there's certain ways things have to be done. If they do contact you after that, then yeah, you need to document everything. If you did everything right, which it's not that long of a list, but if you did everything right in that capacity, and they keep calling you, you need to document every time they call. You need to literally write it down and document every time that they call. Take a screenshot with your phone, do all that stuff, because every one of those calls is a violation, right? And it gets further than that, but it ends up being a situation. The answer is yes, you can, as long as the notice that you confirm that it was received and all that stuff was done properly. Then yeah, if they continue to contact you after that, absolutely. And always, like I said earlier, always document everything. When you're dealing with collection companies, they are so sloppy. Okay, because the people that they hire to do a lot of their stuff, they pay cheap labor, right? It's largely commission based. So you're in a lot of cases, you're dealing with people that have terrible attitudes, may not have the necessary education to be doing what they're doing, and they're not really worried about it either. So they make a lot of mistakes. So if you're that person that can be administrative and tactical about it, a lot of cases that can work in your favor, especially when you're dealing with collection companies.
John, these people can go on YouTube and type debt collection companies and how they operate, and you see the scum of people who work in those places.
Listen, I for the last 10 years, I've been screaming with these people on a regular basis, so you don't have to tell me. I'm aware of just the level of ridiculousness that exists there. That's why I'm always saying to people, always document things, man, because I can assure you a lot of these people are not being as sharp as they need to be, right? And they're not being as concerned about legalities because they're assuming that you as a consumer aren't going to have a clue.
Correct.
Right? And a lot of them don't know. Keep in mind, you don't need a license. Just like I talk about all the time, there's no requirement for you to collect debts. There's no licensing you have to go through. There's no continuing education. So there's no base of knowledge, right? They're not law. They don't go to Harvard for law school in order to be able to come out and collect. So they don't know half the laws that they're collecting on. So I know I'm giving a long-winded answer, but it's just to project the fact that you should definitely always, if you're going to deal with them, always document everything. If a collection company is calling your family member or something for a debt, that's a violation. If they're calling your employer, that's a violation. None of this stuff is allowed unless, now, obviously they can call your employer if they have a judgment with the idea of trying to extrapolate, the wages. But outside of that, if they're calling just to collect, they're not allowed to do that.
Correct.
So things like this are things that you can protect yourself just off sheer knowledge, and it's just make sure if things like that happen, you just document it. It's definitely what you need to do.
The first Genesis project also asks, do most creditors have debt buyers already established?
Do most creditors? Is that what he said?
Yeah. Do most?
Yeah, absolutely. Most of them have relationships specific, and honestly, most of them are the big boys, because when you're Capital One and you're Citi and you're Chase and you're rolling off, 30, 40, 50,000 charge-offs a month, right? You got to have somebody who's got the liquidity to be able to do that. And there's only so many of them that are that large to be able to take on that kind of volume, right?
Yeah.
So to answer the question, yes, but there's really only, for the really big banks, there's only a handful that they can really deal with. Midland, Portfolio, ERC, Enhanced Recovery, IC Systems is another one. I mean, these are big companies, and they're well capitalized as a result. Some of them are publicly traded, and they have access to a lot of capital to be able to buy these, and that's ultimately who takes these out off the creditors, in most cases, the big ones.
Yeah, Miss Divine Brown just answered the question and tagged the Genesis project. I do notice that credit card companies prefer certain debt buyers. For instance, Citibank and Portfolio Recovery.
Yeah, they're all the. But it's just because Portfolio is a publicly traded company, and again, it's because of what I said earlier. They have the ability. It's not that Portfolio does any better business than anybody else. It's just the fact that they have the ability to buy large tranches of this and give them swift amounts of liquidity to pay for them, right? They don't have to stagger it. They don't have to set up payment terms. Okay, here's 50,000 charge-offs. You're buying them for, the face value on that is $20 million. You're buying it for $200,000. Here's your wire. Give us our file, right? And it's
Correct.
a little more in depth than that, but the fact of the matter is that's how it plays out.
Okay, and then Mike Tyson Said, cool, thanks for the info. Where can I go to hire your company for your professional service? I just tagged you, Mike. Just email us at GizzyCredit@GizzyCredit.com. That's GIZZY credit at GIZZYcredit.com. We get back to all the emails fairly quickly as well. So Curtis Davis came in. Good evening. First Genesis Project. Facts. Wait. I thought 45 said everything was back to normal. That's the president. That when we were talking about the Rona, Jay, and opening up the economy. Economy is doing very, very good. Oh, that's what First Gen said. Okay. Mike Tyson says, I bought 5 Samsung Note 10 phones. Each can do 6 calls at a time. Then I plugged up the collection agency's phone numbers for 2 weeks with their burner phone numbers until they updated their systems. I don't know. Yeah, I don't know. I don't know what that meant. But if you want,
he's just trying to mess with them.
oh, okay. Concentration of people. Okay, but if you look at it at everywhere, the concentration of people are at record numbers in densities we saw, like New York. Okay, yeah. And then it's a wave. New York was first. Now others may start, and New York again fall. Probably. And then Clorox,
I think that's what we said earlier. It's just look. It's not an if. It's we're seeing the areas that reintegrated early are the ones being hit with it. So it's inevitable. Areas, and these are areas, by the way, you're talking about Arizona, you're talking Texas, you're talking Florida, areas that are much less densely populated. The population isn't concentrated as much as it would be in the bigger cities, the New Yorks, the Philadelphias, the Detroits, etc. The concentration there is exponential, right?
But Jay, after 3 months of being closed, like First Gen asked again, after 3 months of being closed, do you think we're gonna close up again?
No, I don't think we're gonna close up again. No,
we're just gonna take precautions.
I think what's gonna happen is I think you're gonna have consumers that are just gonna choose not to go out, right? Which is great if you own Amazon.
John, if you my mom, I told my mom is 70. Yo, mom, it's going after you. If you elderly and you got pre-existing conditions and it gets you, it's hard. Even if my mother's blood type is O, and that's like they say, because the blood type O's are like more sustainable, more stronger to take on the virus. And blood types A, they always get sick. I'm blood type A.
Here's what I can tell you. I don't, everything that the media says, I fact check myself.
That is very true.
But what they're saying is that in Florida now, what we're hearing down here on the ground is the fact that they're saying a lot of the new cases are younger people. Like they're 20s to late 30s, as opposed to 50 plus. You know what I mean? And the concentration is spreading out as it presents itself. Now, again, I have no personal. I just saw it on the news yesterday. Did a whole thing on it per county down here. But that's what they're saying. Now, who knows if that correlates anywhere else? I think it's inevitable, like we said earlier. It's inevitable that if you don't have an inoculation, look at the flu, by the way. Okay. Look at the flu. The way the flu came into our society was through the Spanish flu, right?
Yes.
The Spanish flu is the modern flu. Spanish flu came in 1918.
Yes.
We're 102 years into it, and it still comes around.
Jesus.
So just understand, people get flu shots. It doesn't admonish them from the flu. It's always changing. There's always an aspect of it that changes. And so
I had a flu shot this year, and I still got sick twice.
That's what I'm saying. So there's always a strain that adjusts. So I just think that although there may be some kind of an inoculation for this, I'm just saying that I think this early on, for it to represent itself this quickly, where people still haven't psychologically healed that scar of shock, that scar of concern, that scar of all that, right? Which is a large amount of people in this country. That I just don't see them running out to buy things, and for all those other reasons. I know the media will convince you that the economy is just humming in certain areas. I'm down here in Florida. Everything's open, right? It's open.
Yes.
I went out to dinner the other day with my wife and my kids. Nice restaurant down here. There was, prime time was 10 people. 10 people.
Wow.
They had a whole staff of 10 people in the restaurant. That doesn't mean, and Florida's been open for 6 weeks now. It was a Saturday night. Went out for Father's Day. 10 people in the restaurant. Nice restaurant, right? A restaurant that normally on a Saturday is humming. So I'm just saying that this is Florida, right?
That is so true.
And we've been open for a while. This is not something that just you open the doors and people come storming out and every single person is willing to go to a bar. Now, understand, a lot of the younger people don't care about it. A lot of the people that aren't thinking along those levels, they don't care. So they'll just go out, do whatever, and they'll, go out at night and they'll go to the bars and stuff and interact. But if there really is a potential exposure to them as opposed to just the older population, you're dealing with a completely different scenario going into the backside of this. You know what I mean?
Yeah. No, you got 100%. And there's so much discretionary income in Florida too that it's amazing that people are not out. But it just says that people are scared, just like people who are afraid to go into 45.
Right?
45 had a low turnout with his thing, but you got a lot of older people who don't want to go out.
Yeah, I mean, you're talking about people are just being cautious.
Yes.
Right? And they're being cautious, which again, it's great for if you own Amazon stock. It's great if you're somebody that's investing in these stay-at-home businesses. If you believe and agree that with what I'm saying, that people aren't really going to leave and it's going to be a very slow grind out of this, then which I painted the picture many times on many different podcasts and given mathematical equations to arrive at it, but I don't see how you can look at it any other way without a vaccine. But if that's the case, I think either way, I think it's inevitable that it's going to reintegrate itself. It's just inevitable. It's not just the people down in Florida, Texas, and Arizona aren't just the dumbest people in the country, right?
Yeah.
It's just because we all opened at the same time.
Correct.
It's not that we're any dumber down here, I promise. I mean, there's some pretty intelligent people down here. It's just because people have reintegrated. There's always going to be that element of society at the same time that are going to just disregard all the safety precautions, right? And they're going to be the ones that are going to be the ones spreading it the most aggressively, right?
Yeah. I got a couple of people are having conversations here in the chat room about states being closed, Alabama not paying unemployment benefits. The support that better supports the reason to have better credit, standing strong, doing business with you guys. Curtis Davis, are states out of money to pay benefits? Unemployment delays since May, enhanced benefits paid by federal. I don't know. Facts, the jobs coming back is like an employer market because so new jobs and so many fighting for those few good jobs. Okay.
Yeah, but that's another supply-demand scenario, right?
Correct.
And I had this conversation with somebody the other day. He works in the medical field, and I said, because his wife's the CEO of a medical company. They do medical staffing for a lot of the big hospitals around the country. And he's like, we're just getting back to work. And I'm like, why are you a little concerned? Are you guys concerned that the supply of jobs you guys are trying to staff is going to diminish? And if that supply diminishes, you have the same 50 people trying to staff that job.
But John, I don't get that. I don't get that. If COVID is gonna come back, wouldn't it be better if you have more nurses?
Well, here's the thing. I don't think that COVID is going to come back to the extent that it was before, right? I think it's going to represent itself, but we're smarter as a society now to prevent it from just flaring. And this is my opinion, by the way.
That is very true. It's your opinion, but it's true. I mean, you wear a mask. Your mask could protect
people know what they need to do to cut back, right?
Yes.
I mean, we've been integrated to the point where we know how to actually, de-integrate ourselves from society again, right? If
social distancing.
Back in their houses, and they will leave again. And that'll help to slow things down. I mean, we'll be able to manually adjust it. The problem is that's terrible for the economy, right? That's terrible for retail businesses. That's terrible for hotels. That's terrible for resorts. That's terrible for planes. That's 50% of our economy that I just described, right?
Yes.
So how do you expect an economy to grow when you're constantly on this Ferris wheel of should we go out, should we stay in? Are the numbers up, are the numbers down? Because that's what's going to go on.
Yes.
It's inevitable. It's not a question of if. It's inevitable. Just like it's inevitable that you're going to see values come down. Just like it's inevitable that all these things. They're just it's just the way it's going to be. I mean, for anybody that thought that we're going to lock ourselves down and we're going to reintegrate back into society and the coronavirus was just going to disappear, that's crazy. There's no vaccine. Well, how would it disappear? Right? How would it disappear? Where would it go?
Well, here's the thing that I don't know what's happening, but First Gen said here in GA, housing market is going up. And then you got Freddie in California says Southern Cali, Corona County is booming. New build townhouse now 500K from 450K.
Right. So again, go back to what I said earlier. And again, like I said before, and this is at the end of the day, this is my opinion, right? This is my opinion that I'm giving, and I can arrive at a numerical value. I don't let the media make determinations based. I've been doing this for almost 20 years now, right?
Correct.
So, and I've been through a crash before, and I've watched this come out of the crash before. This one looks a little different than the last one, obviously, but they all have the same basis, right? You're seeing a surge of demand because people are surging out of their house, like I explained earlier. Now, the sheer fact that if people don't make as much money, how can the house prices go up?
Yes.
If the jobs aren't there, how can people keep selling houses if it's a full documented loan? You have to be a believer. If you think, like Freddie said, that values are going to go through the moon in Corona, California, and in Georgia somewhere, they're going to continue to just blast off to infamy. You have to believe then that we have a growing economy and that inflation is intact and that people are making more money, because that's the only way you can substantiate an increase in prices and values of real estate. So if you believe that the economy is going to take off, and if you believe that people are going to make more money and every one of those jobs is going to come back and they're not going to tighten up mortgage requirements, and none of this stuff's going to happen, I completely agree with you. The problem is I don't believe in any of that. I don't think the economy is going to come back. I don't think people are going to make money. The average wage of an individual in our country is $55,000 in January. I bet you that drops by the end of the year to the low 50s, which means you're now taking 400 pre-tax dollars out of every person's pocket, or the average person's pocket, which means that they can afford less. That's the equivalent on a mortgage at a 55% debt-to-income ratio of $1,000 gross a month. These are things that it's fine for the next couple months until that supply and demand kicks in. It's fine. It's great.
But over there in Georgia, how about these states that people are trying to abolish the police? You think people want to go into a state that has no police?
There's just so many things. We made an entire podcast on people moving out of the city.
Correct. That was true.
The city has. So that's a movement that is already taking place.
Yes.
That's not an if, that's a when, right? So that's another thing that's going to take time to unfold. So is the states, like Curtis said, being underfunded. The cities are going to be the same problem, because the areas where they were relying on revenue over the course of time, that revenue is not going to be there. All this stuff, but it takes time. It doesn't happen overnight. So right now, if you're the guy that's rushing in to buy the house 30% over or 10% over ask, I hope the intention is to stay there for a while, right? I hope that's the plan, because like I said before, if you believe, if you sincerely believe as a consumer that values are going to continue to go up and the economy is going to take off, then you'd have to believe that wages are going to increase. You'd have to believe GDP is going to go up. You'd have to believe all these economic variables would increase in order to substantiate a massive increase in prices, because otherwise it doesn't work. It doesn't work. There's debt-to-income ratios that offset these things. There's certain safeguards economically that stop to a certain extent from values just running away, right? And not to mention, keep in mind something that everybody's not taking into consideration. These states, if they're like Curtis said, if they're underfunded, how do you think they make up those? How do you think that they make up those deficiencies?
Yes.
Through taxes, which means you get less money.
Oof.
And they can't do it this year. But
what are you trying to say? You're trying to say
they gotta be able to get that money back.
Check out, guys. John telling us that the taxes are going to go up.
Yeah, we did one about that already, though, because they were talking. That was a big thing they were saying. Somebody's going to have to pay for all the stimulus money. It's got to come from somewhere, right?
Correct.
So, it doesn't just float on forever. We've effectively almost doubled the national deficit in the course of 6 months that we accumulated over the course of the entirety of our country's history. So, obviously, in doing that, we're going to have to figure out a way to start paying it down. How do you think that happens? Through taxes. So, anybody that thinks that there's not going to be a tax run-up over the course of next year, going into next year, whoever the new president is sadly mistaken. There's no other way that this gets paid for. There's absolutely no other way. There's just not enough. There's not enough different. Sure, in certain cities they're going to start taxing you on soft drinks and the air that you breathe and stuff, but that's not going to be enough to cover the difference.
Oof.
For states, that's not going to be enough to cover the difference.
John, 40% of the highest paid earners in New York City, guess where they went? They came to the Jersey Shore. They went to Cape Cod. They went to Connecticut because it's crazy. New York is getting crazy with taxes and all that. Why are you going to stay there?
Connecticut's no good.
Connecticut's no good.
So is Jersey's terrible with taxes. Every one of them up there is a shit pit of taxation. And
Jersey.
That's why everybody's moving out of it.
I'm in Jersey.
No, I understand that, but I'm not saying it's a shitty area. I'm saying it's a shit pit of taxation.
Oh no, right? It's stupid. Yeah, it's
that's why
shitty.
Nobody wants to live. That's why
nobody
David
wants
Temper,
to live.
Who's one of the biggest hedge fund managers in our entire society, I think he manages billions upon billions. When he moved down to Miami, the area that he moved from, it was a huge dent in New Jersey. They had to readjust their whole state's taxation system because of the money he extracted from the state.
Yep.
You know, that's how much taxes he was paying on the result of his income. So, I mean, down here in Florida, man, there's no personal income tax. That's why it was so important for them, though, to get back to work and get the economy started so quickly, because they make their money off sales tax. And season down here, meaning when everybody comes down when the weather's great, is from November, typically, until like April or May.
Yeah, but that's where you are at. That's where you are at, because I've heard of Orlando, like Jacksonville. They could get to like 30 something for like 2 weeks.
Wait, they could get to 30 something for 2 weeks. What?
30 something degrees, like 40s.
Oh yeah. Northern, like central Orlando gets a little chilly, but northern Florida absolutely gets cold. Yeah, for sure. I mean, I'm not talking Philly cold, but it's seasonal. You know, down here it's either beautiful or hot. You know, I mean, there's not a cold element that comes through here, but in Southeast Florida. But yeah, the point I'm trying to make though is just that there's no state tax here, none, and that's why they needed to rush the economy open, because they need that revenue. You understand what I'm saying? Like when he opened it back up in April or May or something, and everybody was yelling at him because he opened up to her, but you're in a real tough spot, right?
Yes.
If you missed half of your season, that's where you get 80% of your revenue as a state.
Oof.
You're putting yourself in a really tough position, right? So, I mean, it was damned if you do and damned if you don't.
Yes.
He went with damned if you do, I guess.
But it's not bad. I don't hear, and usually
there's down here. There's nobody's complaining about it. I mean, people are crying. The media complains about it. The media shits on Florida all the time because they open too early and blah 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 blah.
Correct.
But you don't hear people down here complaining about it, because the reality is, once you take government out of it, it's the people. We're equipped as human beings. We're smart enough, and we've been given enough knowledge of how we can protect ourselves that we need to start behaving cautiously, right?
Correct.
And we know how to behave cautiously. If you expose yourself to an environment that is overwhelming with people and you're tight confines, you know you're running a risk, and you know that. You know, like I always say, you don't need a Harvard MBA to know the risk areas you're putting yourself in. If you're keeping your distance and you're following the requirement, you know, you're obviously stacking the probabilities in your favor, and that's what you're seeing down here. People could go out to eat. All the restaurants are open down here, but people aren't going out to eat because they're still cautious, right?
Correct.
They're not being reckless. They're being smart about it.
Correct.
And as a result of that,
and just imagine you from Jersey, and you 65 years old, and you retire with your pension. The first thing you do is says, nope, I'm going to Florida. The Rona comes over. And you like, oh, hell no, I just retired. I'm not about to go out and die. I mean, that's how the media will put it. That you'll go out, you'll get the Rona, and forget about it. You're done. You over 65, you got pre-existing conditions. That's it. You're done.
Yeah, I mean, I think that
my thing is that the discretionary income in Florida is big. There's a lot of wealthy people out there, and they're not going out.
But no, you're not even taking into consideration more than that, though. The discretionary income in Florida, not only for that reason, is big, but it's also because you're not getting taxed. There's no state income tax. So let me give you an example. Yeah,
give us an example, because over here in Jersey,
every 3.5% comes out of every one of your checks. That's their state income tax, right? Personal income tax, 3.5%. In New York, it's something obscene. In Jersey, it's something moronic, right? Let's say, for argument's sake, in Jersey, it's like 6%, which I think it is, something stupid like that, right? That's 6%. If you made 10 grand, gross a month, that's $600 times 12 months. That's $7,200 that they're taking from you, right? As opposed to down in Florida, you don't pay any of that.
How about Puerto Rico, John? You know, I think about Puerto Rico. There's a lot of wealth managers that live in Puerto Rico too.
Well, I don't know enough about it because I just don't, unfortunately. I mean, I think the wealth managers you're talking about. I mean, there was a time when
Peter Schiff lives in Puerto Rico, and I think it's because of no income tax.
There was a time when Puerto Rico borrowed aggressively in bonds from a lot of the big money managers here, the Goldmans, the Blackstones, so on and so forth. And they borrowed heavily. They were paying bonds out at like 15, 16%, something ridiculous. And it was borrowed by the Puerto Rican government. And, it didn't necessarily end too great. So I'm guessing that there's a position there because there's probably assets that are owned as a result of that and compromised for the amounts that weren't necessarily redeemed. You understand what I mean? If they're United States money managers, I'm sure there's a presence down there to whatever they were able to work on the workout from it. Because I know there was issues there, so I can only imagine it wasn't publicized how they worked it out. But there was a ton of money that was borrowed, and there was issues on the payback. And this was like 3 years ago, so I can only imagine that could have something to do with it. But outside of that, I don't know a ton about Puerto Rico. I don't. As far as
Puerto Rico is still expensive too. They got the Jones Act. Everything needs to be shipped in, so it's more expensive. They don't make anything over there. Everything has to be shipped in through ships.
Yeah, well, I mean, that makes sense.
Yeah. Okay. We already got 2 hours, 5 minutes. Anyways, still got a couple of questions. Mike Tyson, he asked for our info, but he also said, I didn't know about what was going on. Being an over-the-road truck driver, by the time I got wind of it, I called the bank and they told me not to worry about it. It has been taken care of. They didn't. Oh, about his the stuff that he owes. They didn't tell me that taken care of means that it was charged off, or else I will call the collection agency, paid it before it hit my credit report. Mike Tyson, look, we have a lot of customers who are truck drivers. We communicate by email. So if you at your truck stop, a lot of people have started credit repair. They're on the road. They live in North Carolina, but they're starting in Texas because they get on the road, they get on their computer, they do their information, DocuSign. We've made it very easy for anyone to start credit repair with us and start helping you guys out. So that won't be a problem in helping you out, even if you are on the road truck driver. The only thing is that you want to be able to have an address where if you do get something in the mail, especially results from the bureaus, you need to be able to have trust in someone to open that mail and tell you what it is, either your wife, your cousin, your brother, or whatever, and then send it over to us. Okay, shoot the information. I know results in less than 10 days. What do you guys do with that? No trust the process. Is this like, oh, wait a minute. Who's calling me? Tim Davis. Why is Tim Davis calling me? The famous Tim Davis, John.
What's that?
The famous Tim Davis is calling us from Wisconsin. Tim Davis. Okay. Is this like Credit Holics Anonymous Recovery? That's us, Jay. But that makes you better. Okay. You playing the long game, paying attention to the detail is the short game, complete game. Okay. Holy trail. Okay. 3 weeks, not 3 months, really. Get me Big John. The goal is 1 year. Okay, cool. Let me see. Somebody says here, Freddie says, get me there, Big John. First goal from the 1 yard. Much love, man. Okay. A guy who sends me people for trade line does that credit bleaching. He gives affidavit and claims fraud for every client. He knows I want to learn credit repair, so want to sell me his system for $1,300. I said, I'm good. I will stick to learning factual disputes. Besides, I have a scientific mind. I want to learn the ins and outs. That's more rewarding to me. That's what Miss Divine Brown said. So there's guys out there selling their put everything as fraud for 1,300, Jay.
Listen, again, there obviously is a market there for that.
Yeah.
For that, for people that want it done that way, for people that believe in it being done that way. So, I mean, like I've said, there's always a market for something, right? It doesn't matter what it is. So, more power to them. I mean, like I said before, and I'll say it again. I just, we want clients that commit, and we're committed to them. Right. I mean, we were very clear about the expectations in no uncertain terms as far as, and then we're also clear about getting you to your goals. So, as far as how anybody else disputes whatever it is that they do, that's on them. I'm not here to crap on anybody else. I wish them the best. It's just not how we do it. Unfortunately, we work behind a lot of situations like that. So I don't know if knowing what I know and how the bureaus are set up and everything like that, and knowing that, I love how they changed the name of it though. Now it's credit bleaching. I mean, that's interesting. They rebranded it. It's got a new name. I mean, you got to rename it though, right? If you're gonna remake it, you got to rebrand it. So more, that's impressive. But and I like the name credit bleaching, but it doesn't. I don't think it makes it any more. In my opinion, I don't think it's the future.
Oh my God. Don't do it, Miss Divine Brown. I know you're not gonna do it. Okay, so look at this, the first Genesis project, which you should know already how real estate works from watching us. It goes, I think the market is crashing in slow motion. I wish the home prices will get with the program, but it doesn't, right, John?
Wait, hold on. You said something about Divine, not for Divine to do it?
No. This is no Divine, not to go with the credit bleaching. With the first gen project, I think the market is crashing in slow motion. I wish the home prices would get with the program.
Well, listen, you got to understand something though. It's not necessarily it's in slow motion. All this stuff moves slowly. It's a slow movie. A sale of a house takes 30, 45 days, right? It doesn't move like the stock market. That's why you see the stock market move so resiliently in different directions.
In 3 weeks, like, remember 20% downfall or something like that?
Yeah, so you mean, no, it was 30%. That's
30%.
But that's why, because you can buy and sell stocks in a blink, right?
Yes.
You can't buy and sell real estate in a blink. You got to get it under contract. You got to go to settlement. You got to close on it. The mortgage got to come with the money. Somebody's got to relist, so on and so forth. So it moves slower.
Attorneys involved.
What's that?
Attorneys involved.
In some cases, right? But not only that, though, but when you start getting on a full asset repricing, you got to start getting into rent rates and stuff like that. It's another area where commercial mortgages and commercial properties get repriced. They're largely based, there's an equity component, meaning the value of the property. But in large part, commercial properties, strip centers, and such, they're based off the income they bring in as well, right? There's an income element to the value of a commercial piece of real estate as well. So when those leases start to come down, because for any number of economic reasons, you start to see those values come down too, right? And that stuff takes time. It doesn't happen in a blink. And not to mention, right now, the media is doing a really good job, the same way they do it on the downside. They're always the accentuators at each end, right? They do a good job of overselling the downside, and they do a great job of overselling the upside. And right now, they're not packaging and explaining that this is based on a lot of pent-up demand. They're packaging it as the economy's doing great. The economy's running. The problem is, if anybody that's listening to this ask their retail, a friend that they know that owns a retail store of any kind, a restaurant, any kind of retail store, and ask them how they're doing, right? Ask them how well they're doing. And they'll probably say we're doing better than May, but ask them how they're doing compared to January, right? And that's your way of trying to get an idea of how Main Street's operating, because corporate America is not Main Street. Corporate America makes up a lot of liquidity in our country, but it doesn't make up a lot of the actual functions of our economy. There's a lot of small businesses that are a very large majority of our economy, right? In very small increments. So when you start to extract them out, it causes more problems. It takes time. To answer this question, it all takes time to unwind, and it will continue to take time. It's not something that's going to happen overnight. That's why I'm always saying, just give it some time, let it And look, if I'm wrong, and over the course of the next 6 months, which I don't think anybody in this call believes, but over the course of the next 6 months, unemployment goes from 25% down to 3% where we were at, then my conversation will change, right? Then my whole opinion and my whole approach will change. But when you're running at what could theoretically be a 30% unemployment and could continue to get higher, right? Possibility of it could potentially get higher before it reaches its peak. You know, and we're a consumer-driven economy. You don't need to be a rocket scientist to be able to figure out that when you're extracting 3 out of 10 people, and you know, like we talked about earlier, there's a majority of those remaining people that are going to be very cautious with their spending.
So you're telling us it hasn't gotten worse yet?
No, it hasn't gotten worse yet at all. At all. This is just, we're at the doorstep. I've said it over the course of the last 3 or 4, well, probably last 2 months. We are still at the doorstep. We are just opening doors. New York just opened today. Philadelphia opened last week. I mean, major metropolitan areas are just opening. They haven't even seen how they're going to play out. You know, and think about a city like, if anybody that's listening has been to New York City, I mean, walk around the street of New York City, 60% of the city is restaurants.
Yes. So
how's that going to work, right? When you're telling a restaurant that was barely making money at full occupancy that they can run at 30% occupancy, yeah, that's going to work. I mean, it's just common sense. These people know this.
With stupid ass rents, Jay.
Insane rents.
Stupid ass rents.
But that's what I'm saying. All these things, right? Like you can do anything you want to convince yourself in the short term that you can hold out hope, you can hold your breath, you can do all these things, but at the end of the day, it really just boils down to numbers. You know, if you look at the local restaurant in New York City in Tribeca, right, which by the way got completely torched, like Soho, because they got rioted and they're completely destroyed, all the galleries and everything.
Yes.
So let's just say you owned a restaurant there that was doing exceptional, and you're paying $75,000 a month in rent, and you were eking out an 8% gain, which is a good restaurant, by the way. A good restaurant makes 8% on its gross figures. So if you do $1 million, right, you'll be fortunate to make $80,000 at the end of the year if you're a good restaurant.
Wow.
Right, after all your expenses and all your bills, right? So if you're telling me that particular restaurant that had to have just the right amount of people in there, be able to turn over just the right amount of tables, can now only operate with social distancing with half the amount of tables at half the amount of occupancy, you don't need to be a rocket scientist to do the math. And if you do the math and realize that the economy represents 15% of our broader our total population, which represents 55 to 60 million people, it's everywhere. It's just, there's so many things like this that are just not being talked about, because what's being talked about on the forefront right now is the reopening, and that's the news cycle. But the news cycle will eventually tie back to reality. I mean, in reality, it will always present itself at some point in time. So to answer your question, no, it has not even started, because we're just still opening up, right?
Yeah.
And that's what's a little more disturbing, because if you think about it, you already see areas like Florida and Arizona and Texas that opened 6 weeks ago.
Yes.
That are already starting to flare up. How much time does that even really give a lot of these bigger economies to really reestablish before they may have people that go back in, you know? If that's the 6-week lead time till you start seeing the virus, represented or reintegrate itself on a large scale, right?
And we're not done with the protesting / rioting too.
Again, it's another thing. It's another thing.
Listen, if you guys have jobs right now, take care of your job. Show up 15 minutes before. You need to be an awesome employee. If you have your own business, you need to be making money where it's at. Like when it's there, you gotta make it. You gotta take it, and you gotta provide the service.
Yeah, for sure. Listen, there's still a lot of companies making money, man. This isn't doom and gloom. This is. There's a lot of opportunity in the economy. This is not me being doom and gloom. This is me. You know, I'm an investor all day. I whether it be real estate or the market or private equity in some cases. I'm an investor, so I'm not down on this economy. I'm saying if you're the average human being and you're not an investor, it's not what you do for a living, it's not something that you're measuring that when you're just making your house as one of your biggest purchases, then you need to be tactical about it, right? And if you don't think anything I'm saying is accurate, I'm not insulted, I promise. I promise I'm not insulted. I'm just trying to give you guys a perspective that is based on a number of different variables, all which tie back to how house prices get arrived at, and how asset prices get arrived at, and how the economy gets driven, and how all these things move around, and how all the sauce is made, right? And the fact that, you know, the news cycle has a tendency to dictate people's opinions in certain situations and helps them to determine how they feel about certain things, and they pretty much get told. And normally when they get told, like I said earlier, by the media, it's normally when you're exacerbating a bottom or you're accentuating a top, right? And those situations are normally too late to get in, right?
Okay.
Do you understand what I'm saying? Like when they're saying, "Oh, the economy's great, the economy's great, the economy's great," you buy it and the market tanks the next day. Well, you don't hear about it again from them until the market's at the bottom. The market's terrible, terrible, terrible. And then you sell at the wrong time and you buy at the wrong time.
John, right now, Curtis Davis just asked, is stocks better asset versus real estate for a quick gain?
I mean, look, real estate. I'm sorry,
stocks
right now
with the way that you just said it right now, with the media driving it, and then people buying and then selling.
Yeah, I mean, I think though that stocks right now are the only real opportunity right now. You know, real estate asset prices are still way too high. Anybody that's a buyer knows that, right?
Yeah.
The deals haven't presented themselves yet. Bonds are yielding nothing, right? It doesn't matter if they're corporates or they're T-bonds. The only real name of the game right now, the only real area to make any money on the investing side right now is in the market, right? But the reality is that you have to be very careful with the market. I mean, I don't tell average people to go get in the market. Curtis seems like a smart guy. He's responded a lot to our stuff. It seems like he understands it. I mean, if I'm speaking to somebody that does what I do, I would say the market is the only place to invest right now where you know, you're going to get a real return. I think you get into real estate right now, I think it's just not the right time. This is my personal opinion, right? By all means, feel free to do what you want, but if you're on an investor side, I think the market right now is the place where you can capture the most amount of equity while things broadly even themselves out, because the Fed has come through and the Fed has said they're going to backstop the stock market. So with that, you have a built-in floor, right, of some degree, a floor that's going to help keep it bolstered, because for a multitude of reasons, you don't get that floor other than the 0% interest rates with the real estate, right? Especially with how high it's priced, especially with the supply and demand issues. There's always demand in the stock market. You're not going to run into that same. Even when the market's tanking, there's hundreds of millions of shares that transfer. I'm just saying that, but I think to answer Curtis's question, I personally think that right now, yes, I think that's the low-hanging fruit right now, and I think that's the place to make the best return, even more than private equity, because I think companies are going to be realigning their balance sheets and stuff, and I just think that stocks right now are a place where you can align yourself with companies and you can align with whatever your ideology is at the time. I think over the next, in my personal opinion, I'll be looking to buy on real estate over the course, like I've always been telling you guys, because I walk it like I talk it, towards the end of this year into early next year, and therefore, because I think that's when opportunities are going to start to present themselves on the real estate side.
Okay. Yeah, Curtis Davis says made 2% today. Curtis Davis up 40% year to date. First Jen says up 10%. Good job. And then Freddie says lost 2% today. Banks are killing me, but 30% year to date. So yeah.
Beautiful. So it goes hand in hand with what I was saying, though, right? You don't get 30% on real estate right now.
Yeah.
So it goes back to what I was saying. It's the only show in the. It's the only game in town right now. If you're trying to invest, it's the only place to invest where you can get equity, and you can be confident in getting equity, right? So that doesn't mean it's not going to be volatile. That doesn't mean it's not going to move around. I mean, doesn't mean any of that. It just means that you have the Fed in there right now, which is providing a safeguard, it's giving people a lot of peace of mind.
Yep.
It's helping people forget about the virus, and it's giving people a lot of confidence of going in and buying. And if historically, if you go back, with the Fed's support, things tend to run up on the stock market. That's telling people to buy.
But Jay,
that's why everybody's getting in right now.
I know, Jay, but on my Facebook, I see a lot of real estate investors with 3 to 4 screens that they're taking pictures because they're in the market now.
Yeah,
so
because it's the only place, it's the only show in town right now. It's the only game in town right now. All the real estate investors are waiting until the market comes back because everybody's looking at it from the same perspective.
Yep.
If you know what you're doing, right? If you know what you're doing and you understand the market, you're just waiting. You're waiting for this to unfold, and what can you do in the meantime?
Yeah.
What's an area if you have any idea? See, look, unfortunately, though, I think it's great that everybody on this is doing well this year and they're up 10, 30. Freddie said he's up 30 for the year or something, just down 2 today, which is fine. But, in a lot of cases, though, the stock market's not for everybody. It should not be, assume that it's an easy scenario. It's not easy. It's not simple, but at the same time, so I wouldn't advise just your average human being that doesn't necessarily understand it to jump into it. But at the same time, it is the only show in town right now. So it is the only area to really grow at this particular moment in time.
Curtis Davis says all tech stocks. The first gen says 40%. Also because I got greedy. I said, okay. Trucker 202 said my silver and gold stocks are running and tech, Tesla, Square, oil, etc.
Yeah. Well, Square just got a bank charter. That's why.
Oh, Square.
So they've been waiting for a bank charter now for 2 years. They just got it. So I mean, the fact that they got that, I mean, they're gonna go stratospheric, pretty soon. It really doesn't matter that they're gonna, Square is a small business owner, right? That's what they all use. The retail fronts, they use Square, but Square, now that they got the bank charter, it opens them up to so many different things. I mean, you're talking about a whole different environment and a whole different means of revenue. They're already running at like 150 price earnings ratio, but still, it's going to continue to run. Since they released it, it's gone up $30 since last week. I mean, you're talking about that $30 represents a 40% move in a stock that's already overvalued. So to give you an idea.
Whoa!
But I don't want to get into this to where.
No, John, I got people. These people here, they're telling us what they're doing. These people, you got people that are watching that are in the market. They're listening to you.
Right. Well, I don't want to.
I mean, it's 2 hours and 25 minutes that we've been on, and just the last 10, 15 minutes we've been talking about the market because people who listen to us are in the market. So
I can talk about the market all day, right?
Listen, guys,
anyway, I just don't want to. I don't want to encourage people that don't understand it to get into it, right?
That is
be dangerous, and I don't want to be responsible for that.
That is true. Now, listen, guys, are you listening to us? If you want John to get into a subject, I don't know if John is comfortable talking about the market. Again, we don't give advice.
As long as everybody understands what they're tuning into, I don't mind talking about it. I just don't want to make it seem like I don't. You get into situations now where things have been real big, and there's this level of confidence that's existing. I don't want to say it's ignorant, but it's a level of confidence that's existing among people where they feel like they're kind of the Fed's carrying everything. And what ends up happening in situations like that over the course of time is you'll see a dump and people will be in tears, right? Because they're just not properly hedged and they're flying naked and stuff like that. And I just don't want to encourage people to get in. They don't know what they're doing. But if I could have a full podcast on the market,
yes,
and that would be a situation I'd feel better about because of the fact that.
Fat boy,
people that would be tuning in for that purpose, right?
Fat boy 850 says, yeah, because I have no clue, like 5 exclamation marks, but I would like to get into it for sure.
Yeah, well, that's what I'm saying. I'd rather do that and get into it, not because I don't like talking about investing, but I love talking about investing. Like I said, I talk about this all day, and this is a large part of my business, but.
I mean, I'm not in the market, so that's something new for me to learn too. So we all learn it together.
But I'm fine doing cash when we talk
guys,
about that stuff.
This is a forum here. Whatever question you guys have up there, and it's finance related, like I said, John is involved with real estate, credit. He knows financing. He knows real estate investing from like $50,000 foreclosure to $3 million commercial property. He's done a deal in. All right. So, John also has customers who are very wealthy people. And of course, we help everyone out here that comes from referrals or YouTube in general, too, because we like to help people, because that's at the end of the day, we like to help people. Curtis Davis says, been in the market 4 years buying more Tesla. Disclaimer. Disclaimer. Thread is the deep in and out your skin risk when dealing with stocks. Okay. Yeah. Well, just write a disclaimer. That's true.
Yeah. Well, that's what I said. But I also think it's probably easier just to do a whole podcast on it in general, right? I mean, I don't mind doing a whole podcast.
Oh, even Glenn Bayish is like, yeah, CashApp.
Yes, about Square. That's about Square.
Yeah.
That's Square that you're talking about. You're talking about Square CashApp. That's another thing that Square has, but Square already had that already. The thing that set them aside was was the bank charter, and they're getting it. Hey, look, I love Square. I bought Square down at 37.5 when it dumped down there when the market tanked. Now I sold it when it ran up, but I didn't think it was going to get the bank charter. But I bought it at the low when it dumped. I had owned it. I love Square, man. I love that. That's why I know so much about it. I love the stock, but it's just too high right now, and you know, it's so the price earnings are so far ahead right now. And I trust me, I think it's still going to run. I'm not in buying like 50 shares, right? So it's a situation where you got to be really tactical in some cases, and you got to buy under. So it's like it's difficult to chase something like that. Even though I love the stock, I love the company, I love the stock. I think it's going to continue to grow. You just got to wait for opportunities to get back in now.
No problem. Okay, so I have Justin Richard who just got in on Facebook, and he's asking. He got a recent repossession. And asking we could remove it, another $10,000 Navy Fed, and he's trying to buy a house. So Justin, just if you would listen in the beginning of the podcast, we got like 3-4 customers already in position to get a mortgage. They're already approved. They're looking for their houses right now.
That was just in the last 3 or 4 days.
That was just in the last 3 or 4 days. Okay, so no problem. Just email me. You have my email. We'll help you out. Let me see. Yeah, this got into, I didn't know so many people who watch us were in the market, John. So, you know, this.
But it's because of what I said, though. It's the only show in town right now.
Yeah.
There's no, those same people that were chasing real estate deals before, they finally got fed up and said, I'm done with it, right? For a multitude of reasons. And now they either had accounts through IRAs or 401s, or they set up some accounts with some cash they had, and they're going. And I think with the right amount of discretion, the right amount of intelligence, and lack of recklessness, I think it can be very rewarding, right? It's just sometimes when volatility kicks up, it can be a dangerous environment for people that haven't been there before. You understand what I mean? And that's the things that, I try to...
Because it's all good and dandy when the market's going up and you're making money. And then that crash comes, what you going to do?
It's not just the crash. When you see volatility pick up, right now volatility VIX is sitting somewhere, I think today it closed around like 30, which...
Like VIX Vapor Rub?
31. The VIX is basically just the fear index, right?
Oh, I thought you said VIX Vapor Rub.
No, it's called the VIX, but it's the volatility index. It basically tells you how many people, the aggressiveness with which people are buying puts, right?
Yeah.
So it's basically an index of that relative to the movement of the S&P. So when you see that go up, that's normally telling you that there's a lot of selling going on, right? Or people hedging that their bets, or they're buying a lot of puts, or they're hedging their long positions because they think the market's going to go down. So when you see that spike, that's a sign that the market's going to be tanking. When you see it go down, it's normally, a sign that things are stabilizing and they're calming down, which normally equates to the market trending up, right? Yes. Like you'll see less zigs and zags, and as a result, the end result is up, because that's the net most of the time, the direction, because there's so much money between, mutual funds and hedge funds and all these dark pools that are coming in every single day, and pension funds and so on and so forth that are buying every morning. There's just a tremendous amount of liquidity in the market. So to really get a push to the downside, you see the VIX spike. To give you a point of comparison, at the pit of the market, the VIX was at close to 90 to 30 today.
Wow.
Close to 31 today. So it gives you an idea how much it's calmed down since then. So, as long as volatility stays low or lower, at its lowest in January at 14 or 12. So as long as it stays somewhere in this area, we should still, but it can spike in a beat. So you just got to be careful.
Okay. No, I see Carmelo is in the market. He's always posting. There's a YouTube guy who's always making money on the market going up, down. It's crazy right now if you are in the market. So Curtis said, get your portfolio over 30K to 50K. Gets easy to earn money. Bought Square in 2017 at $20. He says.
Yeah. I love Square. Like I said, I got it when it dumped in March. I owned it on and off. I flipped it a number of times, but when I got it, when I saw it dump, I bought it down at 33.5. I bought it at 37 and then 33.5. The bottom of 32.5 was beautiful, but then I didn't keep it because I didn't think they were going to get this bank charter. I honestly thought, I figured in the next earnings call, which more than likely is going to look terrible because of the fact that half their merchants, where they were making a predominant amount of their revenue, was as a result of the fact that their merchants aren't open. They're largely like restaurant, retail-oriented merchants. That's where they get a lot of their income. But given the fact that now they got this bank charter, basically supersedes everything, because now you have a growth kicker that kicks into the situation. And now you're working off of a different market cap, or at least a projected market cap, which is going to change the price, which is why you see it up 40% in the course of a week. So I don't know how much more it's going to run because everything's speculative right now, but I think, I'll be looking for a chance to buy again when it pulls back.
Okay. All right. I mean, we got a bunch of people here who bought UVXY at 12 in February. Road to 60. Volatility index. Yes. 401ks are in trouble. Trump allowing funds to get access to them. That's what Trump is saying.
You're not getting penalized for it. Yeah. Well, I mean, again, that's going to be something that's going to have to pull back too. So it's just a matter of time before that's going to have to stop, because then you start messing with the whole foundation of the actual and the broader taxation of it. So, but this stuff we can. I'd be happy to do a whole podcast on stocks.
Oh yeah, people are gonna love it. I think now that we know that, you guys like to talk about the market, what's going on. If you guys want to have like a market recap, but the stuff with stocks happens so fast, Jay. Like in a day, things change overnight with the stocks, so it's hard to like do a pod.
Yeah, but you know what? Look, largely speaking, though, I mean, if it's trading in a range, like we're trading in a range right now, which we've been probably since the beginning of the month, at least on the indexes. As long as you're staying within a range, the basic drivers are going to be present, right? I mean, right now the basic drivers that are in the market are largely the Fed on the upside and the virus on the downside, right?
Yes.
And the more the virus kicks up and the more that gets the front of the news cycle, the more you're going to see the market tick down because volatility is going to pick up. The more you see the Fed get talked about and effectively vaccinations and the end of coronavirus, anything positive economically, you see that tick up. So as long as we stay in this range, yes, it moves a lot, but a lot of it is a lot of movement that lands back at, it's incremental in a large case, unless you get one of the days when things pick up or spike or there's news on a particular stock, etc. So although it seems like there's a lot of movement on any given day, there's really not. It's not as much movement as you would think, and the same drivers are present. It's just they may not cover as much ground that day.
Okay, Justin Richards said he checked a couple of weeks ago and was told 1,400. Just tight with the money at the moment with the whole COVID crap going on, but I'm definitely interested. Seems you can help me with getting into a home as well. Okay. All right, John, if we keep talking about the stock, people just keep having conversations. They're just going to keep you here. So, hey, John, who better for the future economy overall, Trump or Sleepy Joe? Oh, no, that's going to get political. Listen, we're not.
No, this isn't going to. Hold on. This is not a political answer. This is just a factual answer.
Okay.
The market. This is a zero doubt question. So 100% accuracy.
Okay.
If Trump wins, he is more market friendly. He is less regulation. He is. I mean, that's all he talks about. Let's be honest. I mean,
yes,
his entire focus is the economy.
Yes.
When you get a Democrat in, that is the polar opposite. That is not. They tighten regulation. It's a total opposite situation. So if you do see Biden win, you're going to see more pressure on the market, more pressure than's already there. So it wouldn't be spectacular. If we're already in a down market, I don't know how much more it's going to exacerbate it, depending on where we sit in November when the election is. But it's definitely, if we're riding high, it could be a significant discount, right? And as we get closer to the election, you start to see the polls present themselves. You'll watch, you'll see. I mean, the news may not pick it up early enough, but as you start to see polls come out and Biden's winning in a lot of those polls, I know polls don't mean anything, I'm just saying, you'll start to see the market move with it, associated with that, as in, in favor of Trump, you'll see it get a boost. Against Trump, whether it be Biden, you'll start to see it.
So you're telling everybody to be careful because these polls go up and down until November 3rd.
But a lot of them are bullshit too, because they might poll like 5 8-year-olds, and they call it an adult poll, right? You got a couple of 8-year-olds, you give them an ice cream cone, and you ask them a question, and you count it as a poll. Nobody ever digs in and sees. I mean, these aren't like hundreds of thousands of people in a lot of cases getting polled. They stack these polls. It's not ironic that every CNN poll ends with a Democrat winning, and every Republican poll with Fox. I'm sorry, every poll that Fox runs ends with a Republican winning. They're stacked. Yes. You got to find something in the middle that's more reasonable and use that as a point of reference. Otherwise, they're all easy to manipulate.
Well, John, you've been on today the longest, 2 hours or 38 minutes. People are still talking here on Facebook and on YouTube.
Good. I like the fact that it's it's.
By the way, people are asking
getting a
when
better idea.
people are asking when they can see you. You're gonna see John, okay? Hopefully next week. I gotta manage. He got a new microphone. You're gonna be able to see John, and hopefully we're gonna be able to take calls. You'll be able to call in and say hello, ask your question, and we'll be able to answer it ASAP. But all that is in the works. So thank you so much. Hey, listen, you want more of these podcasts? Just like and share. You know, the more you like, the more you share, the algorithm goes up. We get to be viewed. More people could watch us. Thank you so much for logging on. Again, John, you worked your ass off today. So
now it's time to go to sleep.
Now it's time to go to sleep.
Yeah.
Anyways, my people, thank you so much. Facebook Live, John, take care. Thank you, bro.
All right, guys. Thank you.
All right, take care. That's John. Anyways, he knows what he's talking about. You guys are still right in there. Yeah, 1,400 was for you guys to fix my credit. Yeah, Justin, listen, if it's 1,400, that means that it's kind of you got more than two negatives. And we definitely need credit repair more than the average, because our average price is not 1,400. It's about 850 to 1250 recently. Unless we see a really bad foul, it could be 1,400, 1,500, 1,600. Okay, so anyways, my people, I love y'all. Thank you so much logging on. If you guys want to talk more about the market, put it down. We'll put something about the market, or John will put something together, educate you guys. You guys can tell us our stories, your stories of the market. But John definitely is excited that you guys all know about the stock market. Okay, definitely. Hey, and those of you who don't know, like me, I'll be able to learn something new and be able to freshen up. Anyways, mi gente, thank you so much. Mira, 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 mira. I know a lot of people waiting for this right here. A lot of people waiting for this right here. Hold on, hold on. What is this? Oh no. Wait a minute. There you go. Boom. Okay. See you later.
GizzyCredit.
Hey.
Anything you want, then you can get it.
Hey.
Don't be scared, cause then you'll regret it.
Hey.
You no longer gotta look pathetic. You look pathetic. GizzyCredit. Anything you want, then you can get it. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic. GizzyCredit. Anything you want, then you can get it. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic. Look pathetic. Gizzy. GizzyCredit. Anything you want, then you can get it. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic. GizzyCredit.
Oh. Go up. Go. Na.
Don't be scammed. What you need is just a change of plans. And time is money, fix that cash. Work for it comes, just get it fast. GizzyCredit.
I'll see you later. Hey.